Your convenience, restrooms are located to your left, after the floor reception lobby, and to your right, after the emergency staircase.
Good morning, honorable members. We're about to start. For those still having breakfast, perhaps you can come into the hall. We're about to start now. We'll just give 2 minutes or 4 minutes, so we'll start at 10:25. So just in exactly 4 minutes, we will start.
To the Access Bank 14th floor conference center. Your comfort and safety are our priority as part of our health, safety, and environmental policy. Please listen to the following announcement. For your convenience, restrooms are located to your left, after the floor reception lobby, and to your right, after the emergency staircase. In the unlikely event of an emergency, you are not expected to use the lift or elevator as you may be trapped while in it. 2 exit staircases are in place for use. One to your left after the floor reception lobby, which you take to the ground floor of the building in front, and one to your right after the service lift or elevator, taking you down to the ground floor to the back of the building. The front stairway that you can access is toward the floor reception lobby just before you enter the Access Bank 14th floor conference center. When you come out of any of the conference rooms, walk left down to the floor reception lobby and turn right into the stairway. The door can be opened by pushing the handle gently. Another emergency exit is located towards the back elevator. When you come out of any of the conference rooms, walk right down to the end of the lobby and turn right into the stairway. The door is activated on the door bar. The door can be opened by pushing the door gently. Please do not use the elevators during an emergency. Rather, locate the nearest exit from where you're sitting in a calm and orderly fashion. Emergency responders or fire marshals will also be available to provide additional instructions as required. You are requested to either switch off your phone or put it in silent mode and not disrupt the flow of the program while here. Please note that this floor is designated as a non-smoking area. Please also note that you are your own chief security officer, being required to protect your personal belongings, such as your phones, laptops, handbags, and briefcases. If you are feeling exhausted, feverish, or having a medical condition, inform your host or any of the organizers who will get you immediate medical assistance to take you to the clinic on the 2nd floor. Once again, you are welcome and do enjoy your stay at the Access Bank 14th floor conference center. The Access Bank 14th floor conference center, where safety and business meet.
Okay, thank you
Ladies
very
and
much.
gentlemen, you are welcome to the
Thank you
Access
very
Bank
much.
14th floor.
Thank you very much. And it's 10:25, so we'll begin. Distinguished ladies and gentlemen, it is my distinguished pleasure to welcome you to day 2 of the Access Bank Trade and Tax Forum 2025. This has been brought to you in partnership with the Joint Tax Board. My name is Chukwudumije Igwe. I'm a lead in the Africa Projects and Structural Finance Group. I'm an investment banker, but today I'm going to be a compare. We will commence with the national anthem. May we please rise.
To the Nigerian national anthem, Mr. Albert Congo raises the flag of the new nation. Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign fatherland. Our flag shall be a symbol that truth and justice reign. In peace or battle honored, and this we count as gain. To hang unto our children a banner without stain. O God of all creation, grant this our one request. Help us to build a nation where no man is oppressed, and so with peace and plenty, Nigeria may be blessed.
Okay, thank you very much again, and welcome to day 2 of the Access Bank Trade and Tax Forum 2025. This is brought to you in partnership with the Joint Tax Board. Now, as with every important occasion or function, we will commence with a prayer. May I invite Mr. Samuel Bankole to give us the opening prayer. Mr. Bankole is the unit head, finance at Lafarge Africa PLC. Mr. Bankole, please.
Thank you. Good morning, distinguished ladies and gentlemen. Please, I would like us to rise on our feet and give reference to God Almighty for these opening prayers. Father God, we thank you for this morning. We thank you for the privilege and the opportunity to gather here this morning. We thank you for all that you have done for us. We thank you for all you are doing for us. And we thank you for all that you will still do for us. Father, please accept our thanks and praise this morning in Jesus' name. Daddy, we commit this event into your hands. We ask, Lord, the grace to learn, to unlearn, and to relearn in this atmosphere. Father, we pray that everyone that will speak here, you will guide them with knowledge, guide them with understanding, guide them with wisdom, so that we can all live here fully fulfilled in Jesus' name. Father, we thank you because you have answered our prayer. In Jesus' mighty name we pray. Thank you.
Okay, thank you very much once again, ladies and gentlemen. Before we move to the opening remarks that would be given by Mr. Lukman Martins, I would like to recognize a few persons here from State Internal Revenue Services. I'll just call out their names. I would like to recognize the Executive Chairman, Bayelsa State Internal Revenue Service, Daniel Enyeke Z. Mene. I would like to recognize the Executive Chairman, Borno State Internal Revenue Service, Bello Ibrahim. I would like to especially recognize Executive Chairman, Cross River State Internal Revenue Service, Prince Edwin Okon. I would like to recognize the Executive Chairman, Enugu State Internal Revenue Service, Emmanuel Ekenen Namani. I would like to recognize the Executive Chairman, Kano State Internal Revenue Service, Zaid Abubakar. I would like to recognize the Executive Chairman, Kwara State Internal Revenue Service, Shade Omoni. I would like to recognize the Executive Chairman, Lagos State Internal Revenue Service, Ayodele Hamzat Subai. I would like to recognize the Executive Chairman, Niger State Internal Revenue Service, Etsu Mohamed Madami. I would like to recognize the Executive Chairman, Osun State Internal Revenue Service, Sholanke Hamzat. I would like to recognize the Executive Chairman, River State Internal Revenue Service, Israel Onwunaku Ebunefu. I would like to recognize the Executive Chairman, Sokoto State Internal Revenue Service, Abubakar Zaki Tambuwal. I would like to recognize the Executive Chairman, Taraba State Internal Revenue Service, Jeremiah Aliyu Faransa. I'd like to recognize the Executive Chairman, Internal Revenue Service from my home state, Anambra, Greg Ezilo. I'd like to recognize the Special Advisor on Revenue, Anambra State, Amara Kate Onyeka. I'd like to recognize the Special Advisor on Revenue, Lagos State, Mr. Abdul Kabir Opeyemi Ogumbo. You are all warmly welcome to this event. Can we give them a round of applause, please? Please. Now, it's also my distinguished pleasure to invite a man I'll consider one of my favorite individuals in Access Bank. He's my boss and also a friend. May I invite Mr. Lukman Martins. He's the group head of the Global Advisory Desk to give the opening remarks. Mr. Lukman Martins. Can we give him a round of applause, please? Let's encourage him.
Good morning. The Executive Governor of Lagos State, Mr. Governor, Mr. Babajide Sanwo-Olu, ably represented by a special advisor on taxation, Mr. Abukabir Ogumbo, the chairman of our state's internal revenue, our distinguished guests, ladies and gentlemen. On behalf of our bank, it is my pleasure to welcome everyone here to our 2025 Tax Forum. Our theme for this year is harnessing the 2025 Tax Act for Sustainable Growth. We are truly honored to have everybody here to deliberate on this very important and topical matter, one that underscores our shared commitment to shaping Nigerian economic future through progressive tax policy and collaborative dialogue. The 2025 Tax Act marks a significant evolution in our nation's fiscal landscape. It introduces fresh opportunities for innovation, enhanced compliance, and long-term sustainable development across public and private sectors. Our conversation today will be around three main critical areas. First of all, to exploring the 2025 Tax Act, the potential opportunity therein, and the implication on both the private and public sector. We also hope to discuss identifying prospects, how SME and corporate organizations can better take advantage of the Tax Act in terms of compliance and tax optimization. The third thing we'll also discuss today will be navigating how the tax compliance in the 2026 tax regime. We hope to discuss the practical guide in how public sector, private sector will adapt to this new regulatory environment. As Access Bank, we believe that engagements such as this bringing together policymakers, industry leaders, practitioners, stakeholders in the public and private sector is vital towards building a more resilient, transparent, and prosperous economy. Thank you so much, everyone, for coming today. We are honored that you're all here, and we look forward to a very stimulating dialogue and charting the way forward. I'm sure a colleague of mine yesterday was telling me that with this new tax law, that next year, somebody, HR told him that his salary is going to be reduced, right? That might be true, that might not be true, but we hope we'll learn from all our chairmen on how to navigate and chart the course as this tax become implemented. Thank you so much once again, and we hope everybody will have a fruitful and rewarding dialogue. Thank you.
Thank you very much, Mr. Lukman Martins, for your opening remarks. Before we progress, I would like to especially recognize the presence of MBA Obasi, who's representing the CD Support Services Group at the Federal Inland Revenue Service. Can we give him a round of applause for attending? And now we'll just quickly go on to the Goodwill remarks. May I specially invite Mr. Olusegun Adeshokon, the Executive Secretary of the Joint Tax Board, to give his Goodwill remarks. Mr. Olusegun, please. Can we give him a round of applause, please?
Good morning, everybody. The Executive Governor of Lagos State, Mr. Babajide Sanwo-Olu, represented by Special Advisor on Revenue, the Executive Chairman of the respective subnational tax authorities who are here present, and who are also distinguished and esteemed members of the Joint Tax Board of Nigeria that has just been recruiting the Joint Revenue Board. I acknowledge your presence. I can see distinguished Nigerians in this gathering, from tax professionals to top minds in the academics, private sector leaders, bankers, public policy analysts, so on and so forth. I acknowledge your presence here. All other protocols I will observe so that I can go and make my remarks. So I welcome everybody to this tax forum organized by the Access Bank PLC. I want to start by expressing my sincere appreciations to Access Bank for putting together this forum, which is a platform for us to engage and deliberate on the Tax Reform Act. And it's been aptly themed, harnessing the 2025 Tax Act for Sustainable Growth. It's a privilege to be in this gathering, which comprises, as I mentioned earlier, distinguished Nigerians with a shared purpose to further comprehend the opportunities and prospects the new tax landscape present for Nigerians. I would like to say at the outset that the enactment of the Tax Acts remains a major milestone in our economic evolution, because it not only represents a recalibration of our tax policies, but at the same time also presents a strategic attempt to align our fiscal measures and aspirations with our long-term national development goal. So this forum presents the opportunity for us to examine this act so that we can interpret the implications it has for businesses and households, and also see how we can leverage it for sustainable, inclusive, and resilient development. I will expect that our conversations today would enable us unpack critical components of the Act, from the incentives therein for investments and innovations, to the measures to support small and medium-scale enterprises, from the taxes that have been harmonized, which we believe will culminate in ease of compliance, will improve administrative efficiency, and also transparency, to the trust we intend to build in the tax system via shared prosperity. From the list of the speakers and panelists, distinguished people, some of whom, majority of whom, were amongst drafters of these laws. So we have an opportunity to interrogate them, ask questions, seek clarifications, and ask them, inquire from them their justifications for including certain provisions in the laws. Some of these speakers and panelists, on a lighter note, are my mentors. They mentored me. I'm looking at one, is at their end, mentored on the good path of life, on the not too good path of life. But they made it clear to me at the outset of our relationship that I will accept them with their assets and liabilities. And I did accept them with both the assets and liabilities. So I expect us to have a great time today, and I wish us a productive and knowledge-building session. Thank you very much.
Thank you very much, Mr. Olusegun Adesokon, the Executive Secretary of the Joint Tax Board. Can we give him another round of applause? Now, we are about to get into the meat of day 2. We're going to have 3 papers that will be presented today. The first of those papers, Navigating the 2025 Tax Act, Opportunities for SMEs and Corporate Organizations, will be presented by Mr. Ajibola Olomola. But before I invite him, let me read out his bio briefly. Mr. Ajibola Olomola, FCA, is the head of Deal Advisory, Mergers and Acquisitions, Tax and Legal at KPMG West Africa. Ajibola Olomola is the partner and head of M&A Tax and Legal at KPMG, where he has served as lead engagement partner on numerous transaction advisory engagements, including tax and regulatory advisory, M&A transaction, M&A due diligence, tax planning and management, and financial model review. His experiences as a lawyer, accountant, tax, and business consultant has enabled him consistently deliver value to clients across markets within Nigeria, Africa, and globally. He has over 36 years experience advising several local and multinational organizations on various assignments across various industries, sectors, and also spearheaded outsourcing and compliance services to multinational and national companies, providing business startup advisory services, including capital mobilization, support services, corporate tax administration services, company administration support services, tax and legal support services, and tax management services. In various industries, Ajibola has served as a key resource person to the federal government of Nigeria on several tax and regulatory initiatives, including e-commerce frameworks, rules pertaining to ease of doing business in Nigeria, petroleum industry reforms, infrastructure expansion, amongst others. He ably supported the federal government in conceptualizing and developing the framework for the establishment of a road infrastructure development and refurbishment investment tax credit scheme under the Presidential Executive Order number 007 of 2019. Ajibola was a key member of the Fiscal Policy Reforms Committee set up by the Honorable Minister of Finance, Budget and National Planning during the administration of President Muhammadu Buhari to consider and make recommendations towards tax policy reforms and related fiscal interventions, and played an instrumental role in the policy discussions and drafting activities giving rise to the Finance Acts of 2019, 2020, 2021, and 2023. Prior to his time with KPMG, Ajibola served as senior legal counsel at Chief Rotimi Williams Chambers, where he handled lawsuits on diverse issues, including constitutional laws, contracts, torts, and so forth. Ajibola obtained a Bachelor of Laws degree from Obafemi Awolowo University, Ile-Ife, and graduated from the Nigerian Law School in 1989. He is a member of the International Bar Association and the Chartered Institute of Arbitrators, the United Kingdom. He is a fellow of the Association of Chartered Certified Accountants, the Institute of Chartered Accountants of Nigeria, the Chartered Institute of Taxation of Nigeria, and the Center for International Legal Studies, Austria. Ladies and gentlemen, it is my distinguished pleasure to now welcome Mr. Ajibola Olomala to deliver the first paper on navigating the 2025 Tax Act, opportunities for SMEs and corporate organizations. Round of applause, please.
Thank you. I was blushing there. I didn't recognize myself. Good morning, distinguished ladies and gentlemen. Morning, sir. A lot of my bosses are here, so I'm not even sure if I were to read out, we'll be held a. But let me stand on existing protocols. His Excellency, the Governor of Lagos State, ably represented by his Special Assistant, the Chairman of the Subnational Tax Authorities, including the FRS Special Advisor as well, who is here. With all due respect to all of you, you are my regulator and regulator of all my clients. And thank you so much for the very hard work that you all do, just keeping things steady and helping businesses discharge their obligations without necessarily, undermining their ability to stay in existence. I remember we've had very serious conversations with some of you on areas where active implementation of the tax law in the literal sense might actually work injustice on taxpayers. And most of you have always been willing to bend backward to accommodate us. So on behalf of my clients and the partners at KPMG, I thank you all. Thank you to Access Bank as well for inviting me to speak today on this subject. I have a lot to say about the tax legislation, as Biola Sonny, Professor Sonny S.A.N. Would tell you, and also Omowe, Mr. Folorenshaw, who is sitting somewhere at the back there, because this is something we engage on regularly each time we see. There's so much to talk about a legislation that changes everything. So when Donald Trump in the US talks about the big, beautiful tax bill, what we have in Nigeria is actually the big, beautiful tax bill, Tax Act in our case, over 800 pages long, if you combine all the four legislation comprising the tax acts. And it changes absolutely everything. Thank you. And of course, as they say, in the abundance of words, error is not lacking. And so it was instructive that the lawmaker gave itself and also the public and the tax authorities a 6-month hiatus between when the law was passed and when it should become effective on the 1st of January 2026. And we're all supposed to use that period to get acquainted with the new provisions, talk to the tax authorities about areas that are of concern to us, so that if they want to make amendments or modifications, they can do so in good time. There is still time. So for those of us who are from the private sector here, if there are still areas of the law of the new law that you find challenging, the audience here, the people sitting here, you will never be able to gather them together on your own. So please take the advantage of being here to discuss with the tax authorities about your pain points, so that if there's any way the guidelines that will come will help ameliorate issues, you can let them know. I will try to highlight a few today. I'm focused on SMEs. SMIDAN has said that 90% of businesses in Nigeria are SMEs. You know, SME sounds fancy. It sounds like something esoteric. We're talking about mom and pop shops. A business in someone's garage, I remember back then when I was in university and the lecturers were having a hard time of things, my parents being lecturers. My mom opened some thrift shop in our garage, selling Coke, selling all those, thrift items. That's an SME, employing 2 people. That's what most SMEs look like. According to Smedan, employing 1 or 2 people. By the way, Apple, the most capitalized company in the world, started out as an SME in someone's garage. Microsoft started out as an SME. So most businesses will start out as SMEs. The question our regulators and our trade policy experts in Nigeria have to figure out is how to incentivize our SMEs to become giants, both locally and internationally. And this law that I'll be discussing in a few minutes attempts to do some of that. Right. So what the NTA does, the Tax Reform Act do, is to repeal certain existing tax laws and consolidate the legal framework governing taxation in Nigeria into a single legislation. So you find that both corporate income tax, personal income tax, capital gains tax have now been harmonized into one legislation. And some might say, why bother? What was wrong with having it in separate legislation? I remember when I started working on tax reforms in 2004 under Ngozi Okonjo-Iweala, who was then Minister for Finance. We had a professor from Duke University who was consulting for the government at the time, under Balama Manu, FRS chairman at the time. And he told us, so long as you maintain a distinction between capital gains and income for tax purposes, you will always find smart people, especially when the rates are dissimilar, 30% to 10%. You'll always have smart people able to bifurcate and hide between the two. Give an illustration, because this matter went to court and was resolved by the Court of Appeal in Ibadan. A company that sells properties. Now, for most people that sell properties, you will say that your tax should be capital gains tax, right? But what if that property was your inventory? And you're in the business of buying and selling property, take a UAC PLC, for example, or UPDC PLC, whose business is building and selling. Should that also be capital gains tax? Does that mean you have no income tax to pay? And the Court of Appeal had to weigh into the matter. Or securities. We know that when you sell shares, it should be CGT. But what if you are a stockbroking firm and the shares you are selling is your inventory? Should you also avoid CIT and pay CGT? Because CGT is 10%. And CIT is 30%. So what this law has done, by bridging that gap and bringing both together and harmonizing them, is to eliminate the opportunity for arbitrage between some of the tax legislation that we have available. And in that wise, it's a really smart idea. And I commend the Fiscal Committee, glad 2 of their members are here, at least, for the work done in that area. Now, going to the key opportunities that may exist for SMEs. Thank you. So the first one I would like to highlight, and there's a little bit of a contradiction as well, is that the NTAA redefines small companies as those with turnover not exceeding 100 million, especially those with total fixed assets of 250 million, excluding professional services firms. I'll come to the exclusion in a minute, because I had a sidebar with Mr. Folorenshaw where I was like, I mean, what did lawyers and accountants do to you that you're excluding us from these largesse? But I'll come to that in a minute. But this is an indication that for small businesses that are starting up, the government has decided to extend beyond 50 million threshold, which was what was there before, to 100 million, saying don't bother about taxes if you are really that small. In essence, this is as good as the government putting capital back into the hands of businessmen. The money you would have used to pay tax, invest it in your business so that your business keeps growing. The idea being that in a few years' time, you'll be big enough to pay tax. And again, good idea. There's a little bit of a contradiction because one of the laws references 50 million, while the NTA references 100 million, but the chairman of the Fiscal Committee has said that that will be harmonized before 1st of January 2026, and that the answer will be 100 million. So for the purpose of my presentation, 100 million is what we're taking. Now, I then come back to why have we excluded professional services? Absolutely everyone in this room is a professional in one area or the other. You're either a chartered accountant, a lawyer. The executive secretary came to speak a few minutes ago. He is a lawyer by training, aside from being an accountant as well. And you find that the professional services actually employ a large number of graduates from Nigeria. Because once you qualify as a lawyer, you can set up your own shop. Most law firms are one-man firms. And that's the same all over the world. If you go to the UK, it's one man and his dog. That's the classic example of a UK law firm, one man and his dog. In Nigeria as well, it's one man. Go to the standard accounting firm. If you go to ICANN and ask them, or go to CITN and ask them, most of their members are one-man firms. These guys are living, some of them live on subsistence level. Once we have decided that we want to target small businesses and exempt them from tax, there should be no need to discriminate between professional services and non-professional services. So I would exempt a vulcanizer from tax. I would exempt a plumber because I'll say they're artisans. But then a lawyer that's sweating blood and has no tax to pay, I don't exempt him. And then I come to my largest pain point. Some of us are registered as limited liability companies, while some do business as business associations, so some of us fall under taxation under FRS, some of us fall under state tax authority. If you are registered as a limited liability company, and this is an opportunity for you in the law, if you know your income is small, best thing to do, go and register your business as a limited liability company so you can benefit from the largesse that Nigeria is offering you. Tax exemption up to 100 million. So there's a clear incentive to do that. But if you are a business name or a partnership or a sole proprietor, and you then fall under PITA, under the personal income tax provisions of the NTA, the business exemption threshold will not apply to you. So if I was a partnership doing business up to 100 million as an individual, the only thing I get is anything below 800, that's what you get. The exemption in the tax table and the tax bands. So I think that should be harmonized. I think the committee should consider a way of recognizing businesses, whether they are set up under CAMA or set up under Partnership Act or set up under any other law. Also, there's revised rates that have now been made available to everyone. I won't bore you by reading them out in detail, but the thing to bear in mind here, when we run the model, for anybody earning 20 million and below, of course, 800 is exempted. But anybody earning 20 million and below, you witness a reduction in your tax payable. If you are 20 million and above, you will witness an increase, effectively, to 25%, if you like. Now, what that then means is that you've got to structure your salary properly and leverage on tax-exempt items like pension, where you can be saving for the future. But besides that, this law will discriminately tax the rich against the poor. And it leads me to a conversation I've had with some other people here as to what the overall philosophy of Nigeria is. So when you watch CNN and see the dialogue in the US between the Democrats and the Republicans, the question that's going on all over, even in the UK, question that's going on now is who finances the federation? Should it be the 1%ers? Should it be the rich guys? Because the poor guys, the smaller guys are so poor, they can't really contribute anything. So let's exclude them, and let's focus on the wealthy. And we've seen people like President Trump weigh in on that conversation by saying, don't tax the wealthy, because we want the wealthy to take their wealth, and they're the ones that can mobilize capital the best. So if you're looking for people who can invest in big businesses, the wealthy are better able to do that. And taxation is supposed to be a way of redistributing wealth in any case. So they don't want to tax the wealthy in some countries, while in some other countries, you want to exempt the poor and tax the wealthy. That's the conversation we're having in Nigeria. And we're saying increasingly, we don't want to tax the poor. We want the poor to not contribute to the fiscal economy. Let them just be there, be growing their business. Let the wealthy contribute to growing the economy. And that's the direction we seem to be going. At some point, we will have to consider whether that is actually the answer that we want to have or not. Because time is fast going, I'm going to rush through a few more slides. The slides will be made available, so I won't feel the need to read through every single one. I will emphasize some things that are extremely important for small businesses. Like we know, businesses don't die when they run out of profits or when they make losses. Businesses die when they run out of liquidity. Cash is king. Businesses die when they run out of cash. The biggest pain point SMEs have is cash. They are bleeding cash. They pay VAT, they can't recover their VAT. They have withholding tax credits. They have to go through a really long, arduous process before they can get their withholding tax credits back. The NTAA has tried to solve some of these problems. Firstly, the scope for VAT refund is now very wide. You know, previously we limited VAT refunds to only 2 items. VAT, input VAT on goods imported for resale, and also input VAT on goods that's stock in trade for production of new goods. That's been removed under the NTA. Now, under the NTA, we are now going to be operating a true VAT, where the totality of your input VAT can be recovered by the business. For SMEs, this is going to be extremely, extremely important. And I hope that the FRS, in implementing these rules, will make the process of refund easy. Thankfully, the law also says that your VAT credit, you can apply it to other tax heads. So if you have other taxes to pay, even if they don't give you back in cash, you can use it to do other things in the tax area. But again, that will still be with reference to FRS. I think that's a very good one for SMEs, and they should take note of that. You know, so the other one is the potential exemption from sale of shares, which has been increased from 100 million to 150 million. This is extremely good, especially for pensioners, people who have small holdings on the stock exchange, or people who have small holdings in their pension assets, which are largely invested also in the capital market. So the capital gains tax exemption threshold has been modified upwards, which is very good for SMEs. Another one is in terms of the category of VAT that you cannot even recover at all, because if your goods are exempted from VAT, then what you then find is that you don't have an ability to recover your input VAT on goods that you then export. That's been eliminated, and so now the law has reclassified VAT exempt goods and services to zero rated. And by increasing, so zero rated means the VAT is zero, but you can apply for a refund. Unlike previously where it is exempt, and so it doesn't even qualify for refund at all. So these are very good areas where SMEs can potentially benefit and optimize their liquidity by reference to VAT and withholding tax. For venture capitalists, there's also now a provision in the law for people that angel investors. These are people who contribute money for small startups. You know, we call it angel financing in the M&A area. And so for assets that are held in Nigeria for a minimum of 24 months, gains accruing from the disposal of assets by investors in that business or venture capitalists or private equity funds are exempted from income tax. Furthermore, the restriction that was available in the law before in relation to mergers and acquisitions, where only companies that are related entities could benefit from tax-neutral mergers and acquisitions, has now been extended to all mergers and acquisitions. So even if you're not related, you can benefit, which is, again, another good thing. And there's been an introduction of the economic development incentives as a replacement for pioneer status. And that will give you accelerated capital allowance recovery, which again might help SMEs for a period of 5 years, which might help SMEs. There have been some talk about whether the pioneer status framework was not stronger, and as to whether the economic development incentive will be a good replacement. But I guess we'll have to see how it goes. We'll have to operate it for a few years and see whether or not there's a benefit. But the guys that have framed this law feel that there will be a benefit. I will skip the next chapter, talking about other areas of consideration. And in my concluding slides, I will move directly to tax as an instrument for growth. Yes, thank you. And in this area, I want to talk about a few things that I think might help SMEs. And remember that my focus here is just SMEs. So if you're a large corporate, I'm not addressing you. This is just SMEs. Small businesses, up to 250 million naira turnover in any year. Pretty small, really. Micro, medium scale enterprises, you know. So they face a complex regulatory environment with cumbersome tax processes and multiple levies. In fact, if you were to speak to SMEs, the real problem they have is not payment of tax. The real problem they have is multiplicity of regulatory authorities chasing them. So you have to pay local government levy on this, license, motor park license. If you want to carry goods from one place to another, someone is going to stop you, charge you an advertising levy because you have a company logo on your car. They have all sorts of challenges. And it's been difficult. I mean, I know the fiscal policy chairman and the members have also said that this is something they want to address. And they'll probably address it by some kind of constitutional law review. But I'm thinking, can we wait for that? If you, again, thinking back to the fact that for these guys, it's cash. They're bleeding cash to the local governments and to the other guys, you know. Why don't you allow them to recover those costs? So if people have paid levies and paid all these charges to local governments, all these, you know, sometimes you don't even know whether they are legal or not legal. Allow the small businesses to recover those costs in their tax calculation. Maybe, I mean, you'll have to find a reasonable way of proving that they incurred the cost, because sometimes those guys that stop you on the highway won't give you a receipt. You know, so the guy is holding a gun, it's happened to me before, holding a gun, says, you're passing through my local government, you have to pay X. I asked him for the law, he said, what do I mean? I'm looking at the guy carrying a gun in the middle of nowhere, say to myself, what's the least path of honor? Okay, no receipt. So how do I prove that I paid anything? I know the tax authority always wants evidence. So we need to figure out how to make it work. But I think that a faster solution, faster than constitutional law review, is to allow businesses deduct from their income, taxable income, all costs that they have suffered, including multiplicity of levies paid to all sorts of different administrators that dot the landscape. And then once you provide states with evidence of what their local governments have charged to businesses operating in their states, I mean a state like Lagos State, for example, if they have that list of deductions that local governments have taken from businesses in Lagos State, I'm sure Mr. Subaya and his team will go and have a conversation with those local governments. Why are you doing this? Essentially, you are taking your money up front. So whatever you have taken from those businesses, I'll deduct from your statutory allowance. I mean, this is just me being wild, right? So, so I'll deduct from your statutory allowance and give you the net. By the time you do that once or twice, the local governments themselves will be desensitized to be collecting money from people on the road. So because most of those monies don't even go to any government account anyway, it's individuals that pocket the money and go on. So we must find a way of solving that problem. That's what SMEs suffer the most. And I think we can find a solution. Allow these guys to deduct those costs. Access to finance is another one that they struggle because of high interest rates due to poor documentation and lack of credit history. Market access and competition, and so on and so forth. And then on the next slide, I'll talk about suggested tax areas. Yes, increase the tax exemption threshold for unincorporated entities. Because for incorporated entities, it's already at 100 million naira. But for unincorporated entities, there's no threshold at all. So no matter how much I'm struggling as a poor accountant, one-man business, I still have to pay tax on my profits. In fact, if I don't pay it in time, I might get a letter from the tax authority saying, what's going on here? And then I've already discussed taxes as allowable deductions. The last one I will speak about is the statute of limitations. Gentlemen and ladies, you have no idea what SMEs go through. It's really, really horrible out there. They get letters every year. They get multiplicity of audits. FRS will audit. State tax authority will audit. And so, I mean, my wife runs a small business, much below the threshold, and yet she receives letters for audit every year. One time I had to engage the FRS gentleman, that, what are you coming to audit in a company that's exempt from taxation? And you can see the revenue is not even up to 25 million. It's something that's been done as a hobby. Say, well, we still have to come and audit anyway. Now, when they come to audit, you have to entertain them, right? You can say it's not compulsory, but gentlemen, we're Nigerians, right? 2 people show up in your office. They're going to spend 6 hours looking through your books. You will not offer them refreshment. I'm not talking about bribing anybody here. You don't even have tax to pay anyway, you're exempt, so there's no bribe. But it's simple courtesy. You are going to entertain them. Somebody's going to have to sit with them to answer questions. That's time you could be spending on your business. So my last suggestion is, can we reduce the time that's available for audit? Right now it's 6 years. But for small businesses, why do I have to go back 6 years? Why? Now, of course, if you see evidence of fraud, because there are people that would actively pretend to be small because they don't want to pay tax. Hopefully nobody does that, but you know the way some of us can be. So if you see evidence of fraud or people who are taking advantage, obviously you're going to apply the full weight of the law to those people. But if everything is okay, and you can see the bank papers, you can see, oh, this is the turnover of this business, can we reduce it to like 2 years or even current year? You know, something like that. I know the FRS has spoken about joint audit with State Tax Authority. Hopefully that framework will kick in at some point. I think it will be a very good idea if we harmonize those audits so they happen at the same time. But it's something that we can look at. So my last slide is on next steps. And in a sense, I started from next steps when I said, let's start gathering our pain points in these legislations. Let's start talking to the regulator to let them know these are the proposals in the tax law. This is how it will affect our business. This is what we would like you to do for us. So that as they are drafting guidelines for the implementation of the tax acts, they bear SMEs in mind and look for ways to make the burden of compliance easier for SMEs. And in that wise, I think we've had 6 months. We've only seen one draft guideline so far. It would have been useful if we had seen a lot of those guidelines already, so that by the time we are coming to 1st of January, people already know what they're going to be faced with. So I'd like to encourage the FRS, the Ministry of Finance, and all the parties that are involved in the drafting and issuance of tax guidelines to please accelerate that work. And ahead of the effective date, I encourage companies and persons to conduct a detailed impact assessment on their operations, their beneficial ownership, and flow of capital within their organization. Develop a risk matrix outlining potential opportunities and risk areas, and engage proactively with their tax advisors for guidance and compliance planning, so that they can develop an understanding of how the law interacts with their business, and they can put themselves in a position where by 1st of January 2026, we are all compliant. This law is to help all of us. The Tax Act helped Nigeria achieve its fiscal objectives. It also helps Nigeria create a conducive business environment for people operating in this economy. So we can work in a cooperative manner to help the tax authorities achieve their objectives while they also do their best to accommodate us from time to time. Thank you very much. Thank you.
Ladies and gentlemen, we give him another round of applause, please. This was a fantastic presentation. I can say that I have particularly learned a lot. I'll tell you a short, it's not a story, but a couple of weeks ago, we were having our NPR session at the bank, and someone raised a suggestion that we have an internal session on the new tax law. And from this presentation, I don't think we need that session anymore. I think this presentation is quite detailed, and we thank you very much for this very detailed presentation. I particularly liked your section on the opportunities, the recoverable input VAT, the VAT refund, and particularly the potential exemption on the sale of shares. I think that was the one that caused a bit of confusion for people. People were always raising questions about capital gains and all of that, but I think that clarification has become quite useful for us. So thank you very much again, and another round of applause for him. We're going to go into a Q&A session, but after that, we're going to have Mr. Abdul Kabir Opeyemi Ogumbo. He's representative of the governor of Lagos State. He's the special advisor to the governor on taxation and revenue. After the Q&A session, we're going to have him give some remarks. So the Q&A session is open. We've got just about 10 minutes. So if there are questions for the last speaker, please just motion to me. I'll bring you the microphone. Or someone else will bring you the microphone. Okay, so someone there.
Good morning, everyone. I am Obalade Adebiyi. I represent Silk Chemicals. I just have this clarification. I need this clarification on VAT rendition. Before sometime last year, VAT was being remitted on accrual basis. At a point, according to the Finance Act, it has to be cash basis. But I personally, I don't know of others, had this issue with FRS. FRS coming to say the cash basis we adopted is not actually the way it should be. So I want to ask if the presenter can throw some light in the application of cash basis on VAT rendition. Thank you.
Thank you very much. That's a very, very good question. And it is one that, because I'm in a forum full of tax administrators, whatever answer I give will likely be contested by some of the regulators, but I'll give it anyway. It's a very contested area, and there's no decided lawsuit, either by the Court of Appeal or Supreme Court, that rests it one way or another. The view I take, and this is my view, not KPMG's view, the view I take is that the law talks about the VAT collected. And so the VAT collected would reference cash, not accrual. So my view, even before this law was passed, is that VAT has always been on cash basis. Nobody's going to go and borrow money to pay VAT. So now, on the other hand, if there's evidence of fraud, because there are some people that would then say, oh, I've not been paid, and then for 2 years you've not been paid. Meanwhile, you're already using the asset. I mean, when you have instances of fraud, obviously, FRS can attack you. I know that if you ask the FRS will tell you that it's either cash or accrual. And they will just tell you to be consistent with whatever you do. If you do it on accrual, you cannot do accrual this month, cash next month, and then go back to accrual again. You have to decide which one you're doing. That's what FRS will tell you. But my own view as a consultant is that it should be on cash basis. That's what seems to make sense to me. And the new law makes it abundantly clear. So that controversy is rested now. Any other questions?
Good morning. Okay, my name is Sonny Nkuma. I represent a company called the Capolis Limited. I want to find out, when you say 100 million treasury for exemption, revenue, right? Not profit. But you find out that some businesses in this country now, because of inflation and other things, 100 million is such a mega amount. Let me put it that way. Some transactions, some companies run business 500 million, but the profits element for which they will be taxed will be very, very low. So when you put 100 million, you will find out that we are going back to where we left. Because before you know it now, the 100 million is one transaction. So does it really make sense? And if you look at it, we say we don't run a dollar economy. Check 100 million naira. It's all about $60,000. So I think in no distant time, we'll go back to where we started. And I don't know how we are going to handle it. Thank you.
It's a very good comment, sir. Thank you very much for that comment. What I will say, sir, is that what you have raised is more of a policy question. as to what kind of businesses do we want to incentivize. So the planners and the drafters of this law, in their wisdom, have expressed the federal government's intention to help the smallest of the small. In most countries of the world, there's no such threshold. Even, I mean, sometimes when you have people artisans working for you in other countries, they will tell you they fill out their tax return very religiously. So to even give you an exemption at all is generous. So whether it should be 50 million, it was 50 million under Buhari. Now it's 100 million. Who knows? The next government might make it 200, you know, since that seems to be the direction. But I think we should embrace it as a good faith effort by the government to identify with the most vulnerable sections of the economy. Nobody said they must do this. They are the ones that chose to do it. So once we then appreciate that, we can then say, okay, what else can be done for other SMEs? Because the range for SMEs is 25 million. So there's micro, which is 0 to 25 million. Then there's there's small, which is 25 million to 250 million. Then there's medium enterprise, which is about 250 million to like 750 to 1 billion. So that's the general range, right? So at least at this exemption level, most micro businesses are covered, all micro businesses are covered. At least 50% of small businesses are covered. And the question is, will this help them grow? And I think the government is hoping that it will help them grow. And I think I agree with that. Thank you very much, sir.
Thank you. Yeah, good morning, everybody. Yeah, the area I'm having concern with is, my name is Amusa Akim. I'm from Westport. We are into aviation security. You know, when you say small businesses are exempted from taxes, I'm talking about withholding tax this time around. You are having a business dealing with another company, and you are looking at, oh, do I deduct withholding tax? How will I determine if the revenue of that business is going to be 100 million or less? And, you know, sometimes FRS tells you, you did not deduct withholding tax, you are going to pay for that. How will I know? Do I ask the businessman that, oh, is your revenue going to be up to 100 million? If he says no, how do I know? That is my question.
Do we take the gentleman behind you and make that the last?
Thank you for your presentation, sir. My name is Akin Fabumi from Nucleus Venture. The questions are centered more on business, and I think we're also individual here paying taxes. So let me ask a question that is individual-based. You have said the government is working on how to allow the poor not to pay tax, so that it is the rich that will pay more. That's fair, and that is expected. But I think we should be fair also to those we call the rich, because it is from that being rich that they are going to give money to those who we call the poor. Let me give an instance. In the new law, there is the issue of the consolidated relief, whereby, I think if I'm right, it is 20% of maximum of rent, which is capped at 500,000. Those you call the rich, who among them would be in a place, in a house, whereby his rent is 500,000 an annum? From that, it means it is not realistic. And at the end of the day, the money now that we were going to be applying the tax table is not going to be fair. So while it is natural justice to be fair to the poor so that they don't pay, I think in terms of the relief that the rich should also get, I think that should also be looked at. Thank you.
Thank you very much, sir. So to answer your question, sir, how do you know that someone's turnover, a company's turnover, is below 100 million? They will tell you. They will inform you, they will write to you. They can obtain a letter from FRS if they want FRS to certify it, if you want them to go that mile. And so you will then know, and you will see from, they can even give you a copy of their P&L statement for the previous year. So you will see that they are below that threshold. and you can then make a judgment. However, even if you were to go forward and deduct withholding tax from them, which you shouldn't do, the law is now so robust that they're entitled to a refund. So they will not be out of pocket. And remember, like I said, companies die when they lose cash. So that cash is vital to them. So the way the law has been framed, they will lose nothing anyway. But if you are willing to do that due diligence, you can then, you may choose not to deduct the withholding tax and explain. If FRS then queries you, you can show FRS the steps you took, the reasonable steps you took. You obtained their P&L, and you were able to ascertain that this is where they fall, and this is why you took your decision. But even if you were to err on the side of caution where you are not sure, and then make a deduction, they will get their refund if they really qualify under that exemption. And in terms of the conversation about the rich, I align with you, sir. Because when I look at, I give people an illustration. I say, it took the richest black man in the world to establish a refinery that has the capacity of saving Nigeria 6 trillion naira in petroleum imports. And you might say, oh, he did a business. It's not a business. He created a new economy. When you go to that area, let's say he has 100,000 workers, they have to live somewhere. They're earning a pay. They have to live somewhere. They will pay rent. Their children have to go to school. Schools will be established. When they fall ill, they will go to hospital. Hospitals will be established. They will wash their clothes. Dry cleaners will be established. So for that one business, if you look at the multiplier effect on the economy, look at property value in that area. If you have land in that area, you are not a billionaire. I mean, someone was saying to me the other day, let's go and buy land around that. I said, forget it. It's gone. You should have bought that land years ago when it was up. Now you can't even touch it. That is what it can do. That is what the rich can do. They can mobilize capital at a leverage that we cannot even understand. Imagine if we had one Dangote refinery in every geopolitical zone in Nigeria. Imagine how transformed Nigeria can be. That's a vision that the regulators are aiming at. That's what they want. They want to see all areas of Nigeria working. If you exempt rent above 500,000, how much is the man in Ekiti paying as rent? See, you're looking at Lagos and saying, oh, rent in Lekki. If you are in Kaduna, what's your rent? So you have to be careful as well. Do you set the law at a threshold where my respectable regulators here, they don't have any work to do anymore, they might as well just go home and sleep because they have removed everybody from their tax net? So we also have to balance it. What makes sense in Lagos may not make sense in other parts of Nigeria. So we need to find a balance. And I think that's what the lawmaker has tried to do.
Thank you very much. Can I just ask you to stay? We want to present something to you. Yeah. May I invite Mr. Victor Okafor, the Group Head of Global Transaction Banking, to present a gift to our speaker. I think you should just come on the stage. Huh? No, that's... You know, he has spoken about when tax auditors come, you have to entertain them. So in Access Bank, when speakers come, we have to entertain you.
Thank you very much.
I think we take on.
Thank you. Okay, hold on. Yeah. Thank you on behalf of Access Bank.
Thank you very much.
Yeah. That was a very wonderful session.
Thank you. Fantastic. Please, can we give him a round of applause, please? Fantastic session. Before we progress to Mr. Abdul Kabir, I would like to recognize the presence of the Lagos State Commissioner for Justice and the Attorney General of the Federation, Mr. Lawal Pedro, Senior Advocate of the State, Attorney General of the State, Mr. Lawal Pedro, Senior Advocate of Nigeria. Can we give him a round of applause? Now let us invite Mr. Abdul Kabir Opeyemi Ogumbo, the Special Advisor to the Governor on Taxation and Revenue, Lagos State, to give his goodwill remarks.
Thank you. Good morning, everyone. Is it afternoon? Oh, morning. Oh, thank you very much. I should be wearing two caps here. When I see tax regulators and the policy makers, I feel I should have been invited as one of the panelists because I have a lot to tell or to share, especially Lagos story. But because I've been assigned by my boss to give a goodwill message, because he loved to be part of this event. You know him and how proactive and intentional about gathering like this. But because of other equally important assignments that has given to him, so he's not able to make it. So because time is fast spent, I'll quickly run to the keynote address as sent by Mr. Governor. But before going on, permit me to recognize our own Honorable Commissioner for Justice and Attorney General, for now, the state, maybe later, Federation, Mr. Lawal Pedro, S.A.N. He's a good brother. I have here also Mr. Lukman Martins, who has been on me over God knows when. I don't know where he got the hint that I'll be coming here for. I had to jump from about 10, 12 hours flight this morning to join this event because he's been on me. Aside from the governor's directive, he's also a very good collaborator. So Mr. Lukman Martins, the Group Head, Global Advisory Desk, Access Bank, thank you for inviting us. Mr. Olusegun Adeshokon, the Executive Secretary, Joint Tax Board, now Christian as Joint Revenue Board. You know, thank you very much for all you do. I may not be able to, cover all the protocol list given to me, except you want me to stay here till tomorrow. So, but I will appreciate and acknowledge our own chairman. I call him my own brother, the executive chairman of Lagos State Internal Revenue Service. That's Mr. Ayo Subar, Mr. Trillion. Thank you very much for coming and representing us well. So you can do that because, yes, I'm going to tell you a bit of what it does, as an agency, because Mr. Lukman asked that I share a bit of Lagos story so that I can be a kind of testimony to others here present. So Mr. Ayo Subair and all the chairmen of various state internal revenue service, I welcome you to Lagos. We don't say this is Lagos. We don't welcome, but this is Lagos. The distinguished speakers and panelists, especially my brother who was just giving a fantastic presentation and paper, Mr. Ajibola Olomola, FCA. Thank you for your thought process. Access Bank directors, managers, staff, members of JTB here present, members of diplomatic corps, gentlemen of the press, ladies and gentlemen, I am honored to address you all at this Access Bank One-Day Task Forum. Today's forum is timely as it will navigate the complexities of Nigerian tax landscape and explore opportunities for growth and development. Our nation is undergoing significant tax reforms aimed at promoting fairness, transparency, and economic accountability. We understand that taxes are the lifeblood of our economy. They enable us build infrastructure and provide essential services. We also recognize that a fair tax system is one that not only collects revenue, but also promotes equity and encourages investment. The new tax law aims to achieve transparency and economic accountability. It presents challenges and opportunities for businesses and individuals. We must understand these changes and adapt to the new tax environment. Lagos State has made significant strides in improving tax administration, enhancing compliance, and promoting voluntary tax payment. We recognize the critical role of tax revenue in funding public goods and services, and we are committed to ensuring that our tax system supports the needs of our citizens. I commend the efforts of the Joint Tax Board in promoting tax cooperation and coordination among government agencies. The board is also doing commendable work in providing a platform for stakeholders to engage, share knowledge, and build capacity. As we share insights today, let us emphasize on tax compliance, leveraging technology for the enhancement of tax administration and the improvement of tax experience. The new tax law, which will take effect January 1st, 2026, brings significant changes to obligations such as tax registration, development levy, along with filing and compliance. It also influences withholding tax, capital gains, personal income tax, and VAT revenue sharing, which will be distributed accordingly. I urge all stakeholders to work together to give clear interpretation to this tax process and reach out to our citizens in a manner like we're having today, so that we can ensure that they understand the significance of their roles in this vital system. Ladies and gentlemen, taxation is not a merely legal obligation. It's a shared responsibility where citizens comply, when business act with integrity, and when government remains transparent and accountable. We create a cycle of trust that fuels national progress. As a government, we remain committed to simplifying tax processes, reducing bottlenecks, and deploying technology that enhances efficiency and minimizes human interface. And at this point, I want to mention certain areas that we have moved as a state. You know, Lagos story, one of the key strengths of our system or success story is our shared responsibility. Number one, Mr. Governor asked to explain what we have done differently. And what he's been able to do is the complete autonomy of our regulator. Because according to Section 24 of the Constitution, which says that you must earn income and declare it to the authority. So we still have state governments that still interfere within the operations of their Internal Revenue Service. So this is key for Lagos, and that is why we keep clapping for our own Internal Revenue Service, because they have been keeping their eyes on the ball and doing the needful. Secondly, we have deployed technology. Technology, we mean end-to-end. End-to-end technology means that from the point of enumeration to its assessment and billing to its payment to the automation of the receipts that we use in collecting those resources, we have automated all of them in a transparent manner to the extent that the filing and all activities are done within our system and ecosystem. And lately, precisely in preparation and in a proactive measure for this new tax law, we launched an application called Lagos Revenue Portal. Lagos Revenue Portals allow all our taxes and non-taxes to be logically managed in a centralized form. And on this, we are now driving towards data harmonization. I'm leaving this program very shortly to meet another engagement around hospitality. And what are we doing in hospitality business? We're trying to merge all the numerous agencies that we usually classify as multiple taxes, but rather get their power or derive their power from the repealed approved levies for collection acts. So we're trying to imagine having about close to 15, 60 agencies meeting a SME, for instance. So it is, Mr. Governor has directed that it's no longer fashionable and not acceptable. So we are talking to agencies so that harmonization of our taxes, both taxes and non-taxes, are in one stop shop. And we also talk about capacity building, which will be the last point, where we do not take for granted how we build our capacity and how to genuinely encourage all the officers, directors, staff that actually make this effort. To the private sector, your partnership is indispensable. You are key drivers of job creation, innovation, and economic growth. We encourage you to see compliance not as a burden, but as an investment in a more stable and prosperous economy. To our financial institutions, particularly Access Bank, we appreciate your role in convening platforms like this by fostering dialogue and capacity building. You are strengthening the ecosystem that supports businesses and empowers citizens. As we approach the implementation date of this new tax law, let us transition with clarity, collaboration, and confidence. Let us ensure that no stakeholder is left behind, and that every Nigerian understands that a stronger tax system means better roads, better schools, safer communities, and a more vibrant economy. In closing, I want all of us to view taxation through the lens of opportunity and not obligation. Let us see it as an opportunity to build our nation into one where prosperity is shared, governance is strengthened, and development is sustained. Thank you very much for listening. Let me recognize Professor Sonny.
Okay, thank you very much. Can we give him a round of applause? Give His Excellency Governor Babajide Sanwo-Olu a round of applause, ably represented by Mr. Abdul Kabir Opeyemi Ogumbo. So we progress. We're going to go into the next session, which is the lead paper, Exploring the 2025 Tax Act, Opportunities and Policy Implications for the Public Sector. The gentleman to give that presentation is Professor Uche Uwaleke. Professor Uche Joe Uwaleke of the Department of Securities and Investment Management, Nasarawa State University, is a financial economist and a renowned professor of capital markets. He is the pioneer director of the Institute of Capital Market Studies and the pioneer head of the Department of Securities and Investment Management at Nasarawa State University, KEFI. He is the president of the Capital Market Academics of Nigeria and was a former Honorable Commissioner for Finance, Imo State. He also held the positions of Chief Economist and Director of Research at the Securities and Exchange Commission, Nigeria. Professor Uwaleke has contributed significantly to policy and regulatory development, having served as a member of the Nigerian Stock Exchange Advisory Committee and the Governing Council of the Chartered Institute of Bankers of Nigeria. He currently chairs the SEC Committee of Experts on Capital Market Studies in Nigerian universities. He is the Chairman, Board of Directors, Nasarawa State University Microfinance Bank, and the Nasarawa State University Consults Limited. He also serves as an independent non-executive director at Cowrie Treasurers Limited. He is a member of the Daily Trust Board of Economists. At the national level, he is a member of the Presidential Committee on Fiscal Policy and Tax Reforms and a member of the Governing Council of the Nigerian Economic Society. Professor Uwaleke is a fellow of several prestigious professional bodies, including the Capital Market Academics of Nigeria, the Chartered Institute of Stockbrokers, the Institute of Capital Market Registrars, the Institute of Chartered Accountants of Nigeria, the Chartered Institute of Bankers of Nigeria as a fellow, and the Chartered Institute of Taxation of Nigeria also as a fellow. He is the author of 10 P's of the Nigerian capital markets and essentials of non-interest capital markets. Ladies and gentlemen, can we give a rousing welcome to Professor Uche Owaleke to deliver the lead paper.
Thank you, Chukwudi. Did I get the name correct? Okay, Chukwudumije. Thank you. Good morning, everyone. Let me rest on protocols already established, but not before recognizing all the chairmen of the state's Internal Revenue Service here. So I've been asked to do a presentation on exploring the Nigerian Tax Act 2025, opportunities and policy implications for the public sector. I would like to start by thanking Access Bank for sustaining this event. I was here last year. I also had the opportunity of speaking at the Access Bank Tax Forum last year. And this year, I've also been given an opportunity to speak. So I commend Access Bank for sustaining this tradition. Before I start, let me weigh in briefly on the debates as to whether the rich, should be taxed more than the poor. I think, yes, my view, barrister, is that I support a progressive tax system that puts more burden on the rich, than the poor, for obvious reasons. The gentleman that just left here, the governor's rep, said something that caught my attention. He said that more taxes should mean, in the governor's address, more taxes should mean, good roads, improved health care, better educational opportunities and so on. It is not for the private sector, in my view, to provide. So the government needs revenue to be able to do that. And remember too, that we say that taxes, represent one way of distributing income. One of the objectives of a good tax system is that it should also serve as a way, as a means, as a vehicle to redistribute, income for inclusive growth. So I think it's on that premise that I support a system that is, as I said, fair, and that's also what this tax act, seek to do, to make our tax system more progressive, to make them fair. So for the number of businesses that are here, I think our duty should be to insist that the government, utilizes whatever tax, that collecting, for the good of the people, and to create that enabling business environment to provide necessary infrastructure, that will allow businesses to, grow. So here I say that for decades, we know that we have been grappling with a low tax to GDP ratio, a country of over 200 million people. Economy, we used to be the largest economy in Africa. But what is our tax to GDP ratio? One of the least in sub-Saharan Africa. At some point, it was hovering between 6 and 8%. But currently, we've been able to drive it up to about 13%, but it's still less than the African average of 15%. The target for the Nigerian Tax Act, or the tax reforms, the target is to move it to 18%, in a few years' time, by 2027. And which is also why what the Tax Act, seek to do is to broaden the tax base. The government needs revenue. There's no doubt that implementing these tax reforms will bring about improved revenue for the government. But the point is that increase in revenue should not be because we are increasing tax rates, but it should be more because we are broadening the tax base, particularly when we have just, rebased our GDP. You have a rebased GDP that has now opened up, a number of economic sectors that they were not there before. So the need to broaden the tax base, cannot be overemphasized, in the light of the new rebased GDP. And another point that I need to make with respect to why we need to broaden the tax base and why we need to implement these, tax reforms also has to do with the fact that if government doesn't have revenues, what are the other options for funding government activities? The other options include, of course, government can print money. Can we afford to print money under the circumstance? The answer is no. We saw the situation we had in the case of, what we inherited by way of Ways and Means. The other option is to borrow. And we know that government has been borrowing. We can see the pace of the rise in public debt stock. In 2014, if you check 2014 December, website of the DMO, you'll find that total public debt stock at the time was just 11 trillion naira. Today, the last number released by the National Bureau of Statistics, total public debt stock is now in excess of 154 trillion. So you can see the pace of public debt accumulation. And that's on the back of the fact that, we are not mobilizing enough domestic revenue. And when government keeps borrowing, what happens? Interest rates are driven up. Okay, that also has the potential of fueling inflation. Yesterday was what? No. Today is it Tuesday? Today is Wednesday. Okay. Today is Thursday. Yesterday was Wednesday. Okay, it was on Tuesday. On Tuesday, the MPC came up with their communique. And we know that the MPC retained the monetary policy rate at 27%. And if you check all around us, our MPR is among the highest, again, in sub-Saharan Africa. So why is the MPC not cutting the interest rates, substantially to enable growth? Why do you think the MPC is not doing that? It's also not doing that because of the pressure from the fiscals. The fact that the economy is still battling with, if you like, sustained government borrowing, fiscal pressure. So the MPC has an eye on how the fiscals are affecting inflation. And that is why, in my view, it cannot afford to cut, the MPR, substantially, because the downside risks to inflation, are still there. So what I'm saying is, government needs to reduce borrowing. And the way government can reduce borrowing is by focusing on revenues through broadening the revenue base, which of course is what the reforms, what the Tax Act, seek to achieve. So I come to major changes in the Nigerian Tax Act. Some of them have been, mentioned by the previous speaker. The first I have here is the development levy of 4%. Now, again, companies' income tax for large companies is 30%. Check. For sub-Saharan Africa, one of the highest. And that was also why in the committee, I was part of the committee from the onset. We had suggested a reduction in the company's income tax rate to make our own, CIT competitive. Standard company's income tax in Ghana is 25%. In Egypt, South Africa, all around, you won't find 30%. Ours is 30% for large companies. And on top of that, these companies pay education tax, they pay Naseni levy, they pay police trust fund levy, they pay industrial fund levy. By the time you aggregate all of that, you find that the effective tax rate is 35%. So it is not competitive. And so when we recommended that, we had that in mind. Unfortunately, it didn't fly. Although we hear that, even our chairman said so recently, that there is an effort to reduce it to 25%. But of course, that's relying on the clause that is there, that can be activated by the president on the advice of the finance minister. But for now, it is still 30%, and it is still high. So the development levy, what it has done is to streamline all those pieces of, if you like, legislation into one. So we now have development levy of 4%. And when it is collected, it will now be distributed to, the various agencies and bodies. The other one, which again a barrister mentioned, has to do with the definition of small companies. Now, before now, the Finance Act had it at 25 million, we recall. Then 50 million. And now we are having 100 million. Just as he rightly mentioned, in the Nigerian Tax Act, it is reported as 50 million. In the Nigerian Tax Administration Act, 100 million. But we also know that whenever you have conflicts in legislation, they are resolved in favor of the taxpayer, which is why we are confident that the 100 million is the threshold. So the whole idea is to exempt small businesses, from paying tax. But we also know, we have been told that even though they have been exempted, they are expected to file, tax returns. Yes, it's a process of trying to formalize these businesses, the small businesses. It will go a long way in formalizing them. And tomorrow, if government is implementing any social welfare program, trying for the small businesses, it has a record by which it can, it can do that. Imagine if we had that record during the COVID-19 era. It would have been very easy to, implement such welfare schemes. And then there is the controversial one, the CGT, capital gains tax of 30%, from 10% to 30%. Let me say from the onset, this is my personal view now. Even though as a member of the committee, I endorsed all that we did. Yes, however, my personal view is that the CGT of 30% is on the high side. Yes, moving from 10 to 13% is a quantum leap. Is on the high side. And again, when I say high, I'm talking about relatively speaking. Look at CGT of even countries around us. Our tax system needs to be competitive. If you Google my name and put rebalancing the tax mix in Nigeria, you will see an article I did that was published in Business Day and many national newspapers, where I argued for rebalancing the tax mix in favor of consumption tax. I said, you can bring down the CIT, for example, okay, again based on studies, but raise the VAT, slightly. So CGT, in my view, the 30% is high. I say this because if you look at Ghana, what is CGT in Ghana? Let me ask you, Mr. Albert, what is CGT in Ghana? No, CGT, capital gains tax rate, is 15%. If you check other countries too, you won't find anywhere that is as high as 30%. So I'm just saying it is high. But I'm also in agreement with the fact that we need to increase it, we need to align it with the corporate income tax rate in order to avoid arbitrage, just as Barrister demonstrated, arbitrage, for arbitrage purposes, which is why it's important that the CIT that we have today, is important we bring it down to 25%. So when we're aligning CGT, okay, we have a reduced rate. If we don't do that, that means CGT will be at 30%. And we know too that this has also generated, a lot of controversy, particularly with respect to securities. What is provided there is that if you sell shares and the volume of what you have sold is more than 150 million naira, and you have a gain of 10 million naira, then you're going to pay CGT. Okay, so when that news, went out, we saw what happened in the stock market. In one day alone, the stock market lost 4 trillion naira because of the fear that investors were going to pay CGT. So foreign investors tried to offload before January, when the thing will come and catch up with them. But the clarification was made later, and that helped the situation. And what is the clarification? That if you bought shares before now, and you even sell it even in 2026, that the cost of the shares will not be used, the purchase price of the shares you bought will not be used as the cost of your shares. It will be compared with the price of the shares on 31st December, and whichever is higher will be used as the cost of the shares, just to reduce the margin. So there's what is called grandfathering of gains. So it will not apply to areas of gains that you have accumulated on the shares. So such explanation helped to calm the market. All right, but a number of investors are still apprehensive. But let me also say this. The people that do huge volumes in our markets are usually foreign investors. And the law was actually targeting foreign investors. The intention is very positive in the sense that it says if you reinvest the proceeds, you don't pay capital gains tax. So it is meant to retain the investments here in Nigeria. We know the dangers of foreign portfolio investments. When they come and buy shares, whenever there is a shock in the economy, they exit. So the idea is to retain those investments there. So the intention is a very good one. It is just that when some foreign investors started exiting, some domestic investors too panicked and followed suit. So we had the head effect affecting the stock market, at the time. But by and large, my own position is that it's important the CGT is brought down and aligned with the CIT, maybe at that 25% instead of the 30%. Now, we also know that the Act has replaced the Pioneer Company Relief with the Economic Development Incentive, which is very important. We know the abuses that have characterized the operations, implementations of the Pioneer Company Relief. You exempt a company. There's a difference between exemptions and tax credits. Exemptions and tax credits. When you exempt a company for the first 5 years under the Pioneer Company Relief, as I said, call it moral hazard or whatever, it became prone to abuse. But now, what obtains is 5% tax credit on qualifying capital expenditure, made by that company for the first 5 years. So tax credit means you are still going to pay tax, but the amount of tax you're going to pay will be reduced by the, by that tax credit. So it's a more transparent system than the Pioneer Company Relief. And then there is also the effective tax rate of 15%. Again, we know multinationals here, do a lot of, if you like, call it tax planning, tax avoidance schemes, okay, profit shifting, to areas of low tax. And then they end up not paying what they ought to pay. So in line with global standards, the OECD standards now, these companies are expected to pay a minimum tax of 15%. So if the tax they are paying is less than 15%, they will be required to do a top-up to ensure that it comes up to 15%. Okay, so it's not only applicable to foreign, but even multinationals that, whose turnover is above 50 billion naira, for foreign companies, 750 million euro. So what are the opportunities for the public sector? Here I submit that the reforms present profound opportunities to reshape Nigeria's development trajectory. I talked about how development levy will eliminate fragmented and poorly coordinated earmarked charges, and how it can also bring about, you can see, line of sight, predictable revenue. Now we have expanded reliefs for individuals, small businesses. For individuals, we saw it, the tax bracket for personal income tax from now 15% to maximum of 25%, as opposed to the current 7% to tax bracket to 24%. Okay, so first 800,000 now will be exempt, as we also have it in the UK. I read recently the UK government reefs, trying to say it's no longer going to allow the minimum, the threshold. And the UK too, if you read recent current developments, recent literature there, you'll find in the UK, the talk now is also about introduction of wealth tax. Wealth tax. Again, a justification for taxing the wealthy more than the poor. So here I am saying that these reliefs, of course, will, particularly for the vulnerable, are beneficial for the public sector because they support social welfare. One way to increase aggregate demand in an economy is also by ensuring that disposable income is improved, particularly for those the low-income earners and small businesses. For small businesses, they will have something to reinvest and grow. And remember, the whole idea is to encourage small businesses to grow to the point where they can come into the tax net. The president will always say that the intention is to tax fruits and not to tax seeds. And there is also this zero rating for food items, for healthcare, as opposed to what we have now, which is exempt. When you exempt food items, what happens? Yes, the items don't suffer VAT, but the person selling is not recovering input VAT. But under the zero rating, okay, the person can also recover input VAT. And other things being equal, other factors being equal, ceteris paribus. That's what it means. Factors being equal, it's likely, if well implemented, to bring about lower prices of goods and services next year. Okay? Lower inflation, particularly food inflation. You also read, the chairman talked about it, and people said, how can this bring about lower inflation? It is through this means, when somebody can recover the input VAT, then the cost is not passed on to the final consumer. Okay, so of course, all this will help public sector. The reform of CGT enhances capital market efficiency and investor confidence. When the capital market, for example, is growing as a result of reforms in the CGT, what happens is that the market becomes a lot more ready for even governments to access funds. Okay, we know that Lagos State government, for example, has been patronizing the capital market, and Lagos State represents a good example. That's one state that I usually cite when I want to make a case for subnationals going to borrow from the capital market. I keep saying subnationals shouldn't be going to borrow from banks to do projects. Where is Chukunedum? Yes. So you're an investment banker. You understand when I talk about funding mismatch, you understand what it means. Yeah. So you don't borrow short term to do long term. So for subnationals, they're encouraged to go to the capital market to borrow, and Lagos State has been doing that, very, very well. So we commend Lagos State for that. When I was finance commissioner, my closest friend then used to be the then finance commissioner, Dr. Rabi Olowo, because we were always sharing ideas. And even now, the current finance commissioner to Oluyemi, we're also close on the basis of that. I know. So Lagos State has been doing very well when it comes to borrowing and utilizing loan proceeds. Okay, so policy implications for the public sector. Of course, before then, the adoption of e-invoicing, VAT fiscalization, and coordinated administration through the Nigerian Revenue Service promises greater efficiency. Let me even say this. Yes, we heard that the implementation will be next year, but to the best of my knowledge, which I'm sure the ES will corroborate, the Nigerian Revenue Service Establishment Act, okay, has already commenced. Its implementation has already commenced. It commenced on the day the President signed that bill in June 2025. The same for the Revenue Board. So the ones that the implementation will commence next year will be the Nigerian Tax Act and Nigerian Tax Administration Act. The other two, okay, we understand, have already commenced. Now, with the updated VAT sharing formula, we know now states will have more money. The federal government is relinquishing 5% of its VAT share to states. So states are going to have more money, and they should be in a position now to provide more of public services. So I think that overall, the tax acts, if well implemented, will bring about, no doubt, more revenues, not only to the federal government, but also to subnationals. What we should be after as citizens, as businesses, is to ensure that the social contract is maintained, that the spending side is also looked into. Because fiscal policy is not just about revenues. Fiscal policy is about revenue, it's also about spending. Spending is the other side of it. You can also add public debt, but it's about spending. So the reform shouldn't be one-sided. It shouldn't be just about revenues. The reform should also be about the quality of spend. So we want to see more of this money going into provision of public goods, provision of social services. We want to improve healthcare, we want to improve education using these funds. And that's why I'm one of those that have been advocating for earmarked taxes. Earmarked. Don't just, when you earmark a tax, okay, it's going in, for a particular purpose. When, for example, we say the federal government is now going to relinquish 5% to subnationals, but we have not said what that extra money should be used for. I don't know whether you're getting my point. Yes, imagine if we said, okay, that 5% tax, that 5% share of the FG that is going to subnationals should be dedicated to maybe education or health. Then you've earmarked it. And tomorrow you can, it's easier to say, to trace or to monitor. So I am always for earmarked taxes. Again, when we borrow, we should also borrow for a reason. And that's also why I've always advocated for the government borrowing with the right instruments. We shouldn't just be issuing FGM bonds. When you issue FGM bonds or you issue Euro bonds, you have not earmarked them. But when you issue Sukuk, for example, you know that proceeds from Sukuk, they are earmarked. You must use Sukuk for infrastructure, for roads. When you issue infrastructure bonds, they are earmarked. When you do green bonds, they are earmarked. But when you just do general obligation bonds, then it becomes discretionary. You can use it for whatever, including for recurrent. Okay, so that has been my position. And as I said earlier on, Lagos State has been a shining example when it comes to borrowing and application of the loans. Okay. Okay, let me conclude. Strategic opportunities for the policy implications for the public sector. I've mentioned some of them in passing. So as the scope of taxable activities expands, particularly in relation to non-residents and cross-border transactions, the public sector must strengthen transfer pricing capabilities, audit systems, and digital taxation frameworks. The shift to self-assessment and e-invoicing also requires investment in technology, infrastructure, cybersecurity, and real-time monitoring. Furthermore, with states and local governments receiving an increased share of VAT and enjoying greater autonomy under the new revenue administration laws, subnational governance capacity becomes central to national fiscal success. States will need to adopt modern revenue systems, enhance admin efficiency, and collaborate more closely with the Nigerian Revenue Service under the framework for joint audits. Okay, I must close by mentioning opportunities for the banking sector, since this forum is organized by one of the key banks we have in Nigeria. So turning to the banking sector, it is clear that the financial institutions occupy a pivotal position in the effective functioning of the NTA. As facilitators of commerce, capital flows, and financial intermediation, banks are uniquely placed to support and benefit from the reforms. The unified 4% development levy may increase compliance obligations for corporate entities, yet it also creates an opportunity for banks to strengthen their role as a trusted intermediary. Through their digital platforms and extensive transaction infrastructure, banks can play a crucial role in enabling efficient collection, remittance, and reporting of this levy, supporting clients in mapping accessible profits and ensuring accurate fiscal outcomes. Beyond compliance, a bank's tax, treasury, and advisory teams can guide clients through the Act's more technical provisions, from EDI claims to capital allowance classifications. The revision of capital gains tax, including its application to indirect transfers, will likely spur increased demand for sophisticated structuring and cross-border tax advisory. I have no doubt that Access Bank's continental footprint and sector expertise position it to meet this demand, helping clients remain compliant while optimizing their holdings and transactions. And furthermore, as businesses seek to leverage the EDI to finance qualifying capital expenditure in manufacturing, energy, technology, and infrastructure, a bank can align its lending products to support these investments. In doing so, it not only expands its credit portfolio, but contributes to national development by channeling long-term financing to sectors prioritized under the reform. In conclusion, the NTA 2025 is a bold and forward-looking reform. It is pro-growth, it is pro-investment, it is pro-sustainability. Above all, it embodies a transformative vision for Nigeria's fiscal future, one anchored on fairness, efficiency, innovation, and long-term financial stability. For the public sector, it provides a pathway to smarter revenue mobilization, deeper formalization of the economy, and strengthened institutional capacity. Yet, the promise of these reforms will only be realized through transparent, coordinated, and disciplined implementation. The government must operate as an enabler and strategic facilitator, setting clear rules. Businesses need clear rules, predictable rules. That's why today everybody is hailing the central bank monetary policy. Why? Because businesses can see a clear, it's predictable, a clear path, strengthening administration and ensuring accountability. At the same time, the private sector must function as a genuine partner in growth, contributing not only capital but also the intellectual leadership and practical insight necessary for effective execution. This tax forum exemplifies that partnership. Access Bank has taken a commendable step in convening stakeholders, shaping discourse, and providing a platform for meaningful engagement on complex fiscal reforms. I applaud Access Bank for its leadership in organizing this forum and for its commitment to strengthening Nigeria's economic architecture. I encourage the bank to sustain this initiative in the years ahead, ensuring that it continues to serve as a catalyst for dialogue, innovation, and policy progress. I thank you for your attention.
Thank you. Please, can we give Professor Waleke another round of applause? Sir, can you just, Professor. Thank you for a very detailed and also a very frank presentation. We appreciate this. So we're going to go into Q&A now. Very quickly, if there are any questions, any clarifications being sought. Someone there. Prof.
Yeah, good afternoon. Yeah, good afternoon, everybody. Good afternoon, Prof. So I wanted to ask Barrister this question, but then when I saw the angle we are going, I know you'll be the right person to answer it with a barrister. My name is Mr. Wisdom.
Okay.
I want to read out something you said, which I wrote down. You were quoting Barrister. He said that Barrister said that more taxes should mean more roads, more infrastructure, and it is not within the purview of the private sector to provide. Hence, the government needs more revenue.
No, I was quoting the special advisor to the governor of revenue.
Okay, okay.
Yes.
So you are quoting him.
But the last part is what I added.
Okay, sir. But something I wrote here is that I said that participatory tax-based financing system demands participatory governance. You were talking about rebasing GDP. At the end of the day, what Nigeria and Africa did was to rebase our GDP, adding something like a carbon grab and so, in order to increase the debt to GDP ratio. That would allow them to borrow more, not as if they are rebasing GDP to drive economic growth. The answer was no. It's just to leverage and borrow more. And you said something about tax to GDP ratio climbing from 6.1 to 13% presently and being low. If you look at some Nordic countries, I mean Norway, Sweden, and some EU companies, the tax to GDP ratio is about 39%. Barrister said something. He said that in UK, your domestic staff religiously fills the tax returns. Why is she or he filling the tax returns? Because he knows that I am going to contribute from my meager income to the government, and I'm expecting the government to do their own portion. In UK, using the minimum wage, you actually need to work for 8 hours a day to take care of your family for a month. All of us gathered here in Nigeria, even if you work for a month, you cannot take care of your family. That's a given. So there was a recent talk that the outgoing African Development Bank chairman, president, gave. So there was something he said that caught my attention. He said African governments are talking about increasing nominal tax rates. But he said that in the actual fact, looking at the data, Africa pays more the highest implicit tax rate anywhere in the world, pegged at 85%. Because one, everybody seated here, you came from North Central. You provide security for yourself, you provide water for yourself. What the government is meant to provide, private individuals provide it. Those are what you call implicit tax rates, which are not accounted for, they are not recorded for, and then not being debated. And if you look at the government of all these new entity acts, it focuses on the demand side, demanded from the citizen. And you, as an economist, you know there's a supply side to it. It was silent on the supply side of it. Sitting here now, we have many chartered accountants here, and the government is telling you that some companies now, PIE, private interest entities. And being a private interest entities, FROCN is mandating you to pay 25 million annually as subscription. You are asking for what? Then, FIRS is asking you to integrate into the new e-invoicing system. And they are promising you that AAPP is going to be free. Barrister from KPMG. If he can speak now, a KPMG will take not less than 100 million to implement this, and that FIRS is free. Add it to 25 million you are paying the FROCN. Add it to your annual CIT you are going to pay and other associated taxes. You are trying to ask yourself some question. This new tax act and all associated, were they meant actually to keep businesses or to drive in businesses? And why is it that nobody is talking about the government side of it? Yesterday in the House, the president gave a directive. He said all policemen should be withdrawn from BIPs. And the senator stood up and said their life is at risk. So you mean that the life of 200 million Nigerians should just go because of a senator? So the police should keep on guiding him, and bandits should kill every other Nigerian. So why is it that we are focused mainly on the demand side?
Okay,
we are trying to implement a first world policy in a third world economy.
Thank you, Wisdom. Thank you, Wisdom. You ended up giving another lecture. Thank you, Wisdom. Yes. Yeah, Professor Sani, yeah, beautiful. Professor Sani will respond to some of the questions he said. Yes. But let me say this. If you listen carefully when I was making my presentation, I also said that for me, fiscal policy, has two arms. You have the revenue, you have the spending side. As I also said, you can add public debt. The three pillars: revenue, spending, and public debt. Now, when the president set up the Presidential Fiscal and Tax Reforms Committee, when we had our first meeting in Abuja, we were as many as 89, to tell you that committee, you can say, was quite an inclusive one. A lot of interests represented. So when I hear people say that it was not inclusive, okay, I tend to say maybe they don't have that information. The including students were also part of that committee, and are still part of the committee. So why I'm saying this, and we worked as sub-teams. Sub-teams, we had the people for revenues, we had also teams for, because it was a fiscal, it was not just about tax. We also had people that worked on the spending side, budget reforms. I chaired the subcommittee on budget reforms. And we also had people that worked on public debt. So the entire spectrum, gamut of fiscal policy, that committee worked on. What you are simply seeing is just the one part of it, the tax part. The committee also has recommendations with respect to budget reforms, spending, and public debt. So that I can tell you. So what I'm now saying is that we are gearing up to start implementing the tax reforms as embodied in the Tax Act. I am saying that we should also be ready as a country, find the courage to also implement recommendations the committee has with respect to spending. Quality of spending is very important, okay, to be sure that whatever money that is coming in is also well accounted for, well spent. We don't spend more on recurrent, for example. That is where the issue of social contract comes in. You're spending, people are saying, I'm paying tax. You want to know, what the money I'm paying is being used for. So I can tell you that the government took that into cognizance by setting up that committee, and the committee also has recommendations with respect. I think it's going to be the next phase after the tax policies. These ones now, when we start, after we begin implementation, the government can also, activate or bring up the other issues. And those issues may not require acts of the National Assembly, to implement them. So that I can tell you. So it's important that we also worry about the supply side, just as you said, not just the demand side. Otherwise, we won't get it right. So maybe I will ask for Pastor to react to some. But let me also say this. The rebasing was not done because government wanted to make better the debt to GDP ratio. Debt to GDP ratio, yes, at some point was getting close to 50%, but with the rebasing, debt to GDP has dropped to around 39%. But the intention was not to, give more headroom for borrowing. No, you rebase your GDP ideally every 5 years. GDP is meant to be rebased every 5 years. Remember, we didn't just rebase GDP; we also rebased CPI. Okay, and these are things that you're supposed to do every 5 years. But for a long time, we never rebased CPI, we never rebased GDP. And the last time we rebased GDP was in 2014, if you recall. Okay, and normally you have to do it because as economy expands, a number of new sectors are on board. You need to capture them in your national income statistics. So that's the major reason for rebasing GDP, not because we wanted to, put a better picture for the ratio. Prof. Prosani.
Yeah. Thank you very much. I'm Professor Abiola Soni, Senior Advocate of Nigeria. I'm the Dean, Faculty of Law, University of Lagos. With all this, your title, you are not a general, but a field marshal. And I enjoyed your lecture. That was a very nice one. On non-tax related matters, we must recognize that taxmen have little or no control on the expenditure side. Their business is just to generate revenue. And even if you make laws, as we did in 2007, under the Fiscal Responsibility Act, that was when accountability, probity was in the front burner. And then the transparent, the three ladies, the three musketeers pushing due process made that law. If a minister exceeds the ratio of borrowing, as you have spoken to, are you going to put the minister in prison? We have made some effort in saying this is how you should spend the extra, but to what extent can we enforce it? The savings from subsidy and all that, governors already have ideas of what they need money for. And no bureaucrats can actually dictate to them how they spend it. Now, I like your intervention on the social impact policy lending by banks, and you challenge Access Bank to lead. Because you have done this for 3-4 years now, and you should come up with a product that will also support the reform, especially for the small-scale businesses. Not just the high-value transaction, energy, and which Prof mentioned. Your business development team can work with the tax expert to develop something, maybe with you working with some other development banks, nationally and internationally. You should be able to come with something that your small business clients can thank you for on a tangible basis. Now I have a question for you, Prof. You romanticize earmark taxes, but I doubt if what you meant is what earmark taxes are, because concepts are very important. In the university, people say, oh, they do theory. Without theory, practice will not align. So when you say earmark taxes, what do we mean? You mean taxes imposed specifically for certain financing. And the good example are the one for TED Fund, the one for NIDA, the one for the engineering sector, and also the long list that is coming. We have all condemned it because that is not the best practice. A taxpayer who has contributed 30%, we feel that government should be able to allocate its revenue based on its priorities. But now you come back and say, because we want good education, pay 3% more. And I want you to know that federal government has actually not solved that problem. What the federal government has done was to do what I call government tax planning. Government has now created education development levy, and we allow everything under it. And the rate has also gone up. I don't think that is healthy. And I want people to know that, look, there are stakeholders who are stronger than the reformer who kept that in the law. Nobody who is a tax expert will say, after a taxpayer has paid 30%, he should pay extra for whatever purpose. So maybe what you meant, Prof, and I want you to speak to it. You are talking about general grants versus specific grants. General grant is the one you have under Section 162 of the Constitution, where money comes from federal allocation, and federal government has no control on what the states and the local government do with them. Okay? But if it is taxes, you are talking about taxes raised specifically for certain purpose. Earmark grants. Federal government can say, we want to help states to develop capacity in certain areas. So we'll give you a matching grant if you are able to provide a counterpart fund. I think, and I suppose that is what you mean, because we have progressed to a level now where no tax expert should actually encourage earmark taxes. I had to do it even as an academic for TED Fund, not because I can't see what they are doing, but because I know countries where you have very high educational standard that we are aspiring to be, they do not have special taxes. So I'll need your reaction to that. Thanks.
Okay, so Prof, I will react and then I will conclude. I will conclude because of time. But before I react, please, I would like my good friend, Mr. Albert, I would like your reaction on this issue of earmark taxes before my own reaction.
Okay, I think Prof, okay, which Prof now? Professor Sandy is right. You know, you mentioned when public sectors, state are raising funds, something close to what we call specific lending. So you are talking about targeted borrowing by the state, not earmark taxes. When you talk about earmark taxes, you are saying government should raise tax for education, tax for water, for gutter, for everything. And we're saying no. Okay, that's why we were discussing this here, and I said, leave this man alone. Okay, so that is the angle it's coming from. You specifically referring to raising funds, borrowing for specific purposes. And I also know that even for banks, when they are lending sometimes, they lend for specific purpose. Thank you.
Yeah, well, thank you. The only thing I have to say here is this. I know, Professor Sani knows, that if not for TED Fund, the little progress we have made in the educational sector today, we wouldn't have made it. Yes, ASU fought for establishment of TED Fund, and that was one. And today, go to several universities, including my university today. You will see TED Fund projects all over. If you had not done that, if you had said, okay, government should, from your taxes, prioritize. Today, you have a government that may prioritize education. Another government comes where you have policy inconsistency, and then will not prioritize education. But when you have it as earmarked, okay, whoever comes in knows that that fund is for education. So if you have priorities, if you have education as a priority, if you have health as a priority, in my view, nothing stops you from, having those earmarked. So that's my candid view. Let me conclude by commending Access Bank. I want to commend Access Bank, and for number one of the banks, you have met your minimum capital requirement. The central bank says 16 banks have met, but you're one of the early banks to have done that. Yes. I'm also commending you. I've seen your financials, the one you released for 9 months. Okay, despite the forbearance, despite against all odds. Okay, one can say that Access Bank today is one of the banks that the country should be proud of. So kudos to Access Bank.
Just 1 minute, sir. 1 minute, Prof. Thank you very much. Can we give Prof a round of applause? I would like to invite my dear sister Elizabeth Ogwebu to present Prof with his gift.
Good afternoon, distinguished ladies and gentlemen. Good afternoon, sir. Thank you very much. It's an honor to actually do this appreciation. And on behalf of Access Bank, we want to thank you for the depth and clarity. I think I'm now proud to say that I understand the Tax Act very well, and I don't need to default to my friends in the Big Fours to actually get this explanation. So thank you very much, sir. So as a token of gratitude, we have a small gift for you. Okay. Very well.
Another round of applause for Professor. Thank you. Detailed presentation. Now we move on. We're very conscious of time, so we're not going to have a tea break. Anyone who wants, I suppose, if you want to stretch your legs, as the program goes on, you can perhaps stand up and do that, but we're not going to have a formal tea break. Please indulge us, please, so that we can release you on time. Okay, so now to move on, we're going to move on to our third and final paper before we go into the panel discussion. The third and final paper would be presented by Mr. Folorunsho Albert, FCA, FCTI. Mr. Albert is the managing consultant of Creston Pedabo, which he co-founded in 1998. He is a fellow of the Institute of Chartered Accountants of Nigeria with over 30 years of professional experience in taxation, insolvency practice, and management consulting. He is also a fellow of the Chartered Institute of Taxation of Nigeria, a fellow of the Chartered Institute of Bankers of Nigeria, and the vice president of the Business Recovery and Insolvency Practitioners Association of Nigeria. He was a member of both the working group of VA ideas, VIDES, implementation in Nigeria, and is a member of the Tax Advisory Committee to the Tax Appeal Tribunal. He is also a member of the Presidential Committee on Fiscal Policy and Tax Reform. He holds a Bachelor of Science degree in Business Administration from Ambrose Ali University, Epoma, and a Master of Science degree in Banking and Finance from the University of Ibadan. He's also a Bachelor of Law. He also holds a Bachelor of Laws from the University of Essex, England. For 27 years, he's lectured tax management, business, and advanced taxation at Wise Associates Limited for ACCA students. As an ADIT holder from COIT UK, specializing in UK and European taxation, an international affiliate of COIT, he has extensive experience in international taxation, cross-border structuring, and transfer pricing. His practice areas include international tax advisory, transfer pricing, planning and implementation, oil and gas taxation management, and various insolvency assignments, business restructuring, liquidation, and receivership management for financial institutions. Mr. Folorunsho started his professional career as an accountant with the National Commission for Museums and Monuments in 1988 before joining the firm Babington, Ashai and Company in 1992, where he gained experience spanning over 7 years as both the head of tax unit and the insolvency department. Mr. Folorunsho Albert today will be presenting a paper on harnessing the 2025 Tax Act for sustainable growth. May we warmly welcome, with a round of applause, Mr. Folorunsho Albert.
Thank you very much. Good afternoon. It's already afternoon now. We started in the morning. I noticed that all the presenters presented for as long as they wanted. You are in for it. I don't expect that I will be stopped until I finish. It is my pleasure to be here. Let me stay on the already established protocol. Even at that, I still want to recognize those who raise assessment, including my own assessment. The tax authorities are well represented here. The chairman of Lagos, Niger, I won't mention all of them. The others can raise assessment. I don't live in those places. They are my people. Kwara State is also here. Okay, so my presentation is not going to be like Jibola, who is already writing recommendation for the new tax law that will be coming some years to come. We don't know. Prof has also spoken about public sector. My task from what I was given is how to navigate the compliance issues in this new tax law that has been passed into law. whether we, I mean, the way it's sounding is like from January 2026, or even from now, some of them are already being implemented. There are provisions of the law backed up by acts of National Assembly, which we must comply with. And so our task is to look at how do we, what are the issues that are likely to arise, and how do we navigate them? How do we, what are we planning, what are we doing? And so, I don't know who is holding the, because I don't think this pointer can work with the presentation. Okay, so you just click, when I say you should click. First is the agenda, which I call the introduction. Can you just click the, if you're wasting time, I will leave you. Okay, so I'll just leave the guy. So I'll do a brief introduction. I'll go over a general overview of the tax reform, because we need to understand what has been passed into law before we start thinking about implementing. The major highlight of the tax reform, I will go into some critical issues as far as corporate tax returns are concerned. I will look at the compliance requirements for corporate taxes, for capital gains tax, what document do you need? I will talk briefly about the VAT and all the issues that companies have to take care of. Exported and imported services has been clarified to some extent. We want to see how that has been tidied up in the law and what we need to do, what type of returns do we have to file, either as a company or as individual if relevant. Again, we'll touch on stamp duties and withholding tax. Stamp duties has become a major tax, including your 50/50 naira that you are being debited when you make transaction is also part of stamp duty. And of course, on other transaction, under instruments. So we'll look at what are the current provisions. And then we'll move into taxation of individuals. All of us are individuals. What are the obligations as an employee, as a sole trader, as a partner in a partnership? What returns do you have to file? When do you have to file the returns? What do you need to put together for the state authorities to be happy? And then for you to also have reasons to brag as a compliance taxpayer. Again, we'll look at some specific sector. I will touch on what are the new provisions comparing the pioneer legislation that we used to have with the one that is now replacing it under the development, economic development incentive. And then I will dwell a little bit on few penalties and offenses, or maybe offenses before the penalties, and then define, so that we'll know that there are some areas that we should not joke with. Whether we accept the law for now or not, there are provisions that we need to comply with. And so, thank you. So you're even with me. Thank you. All right, so the first one is the summary, like you said, the executive summary, okay, which is just a glance at the changes that we have. We have the company income tax remain 30%. That has been mentioned here already. But we have also provision in the law that says that with the approval of the NEC, if a proposal is made by Ministry of Finance, that rate can be reduced to 25%. That is already in the law. And I have it heard that government is trying everything possible to ensure that that rate drops to actually 25 before the implementation commence. So we're going to be looking at that. Small companies, we have mentioned that the criteria that determines whether you are small and your obligation, I'm going to be talking about what obligation do you have as a small company. Do you still have to file returns? Do you file VAT return? If you don't file, what is the obligation of the person you are dealing with and all that? Then, of course, loss-making companies, entities are now tax exempt. The issue of minimum tax no longer apply, but we also know that there is a bigger minimum tax that has been hidden somewhere in the law now. There's the interest on related party loans. This concerns companies borrowing majorly from your related entities, okay? And what are the obligations? What must you look out, okay? Because there is this bar that you cannot deduct more than 30% of your EBITDA, okay? So that is also very critical for businesses in getting ready for the implementation of this law. And then the VAT changes. VAT remains 7.5%, but that is not the change. the full deduction of input VAT, that if you incur any input VAT on any transaction, you are now eligible to deduct. But there are also provisions that have been hidden in the provision of the law that limit how much you can really deduct. For example, if you take Access Bank, what is their revenue, interest, fees, commission? How much of those income and fees are taxable? Only the commission. The interest is exempt. Okay, so meanwhile, they will have incurred input VAT on all their overhead, all their assets, okay? So which means they will have huge input VAT that is supposed to be deducted from what? From the VAT they will have charged, but they're only charging on what? On fees and commission. So there's a provision in the law that says that the input VAT you can deduct is only must be related to the output VAT that is subjected to output VAT. So which means there will be proration when it comes to deducting input VAT for companies that have the bulk of their income exempt from what? From VAT. Otherwise, the government will be out of pocket straight away. Then we have e-invoicing. Yes, e-invoicing is already everywhere, even though it actually started before the law was passed. But of course, it is this law that now, gave credence to the provision, to the implementation of e-invoicing, and including banks, any company that has a turnover of not less than 5 billion. Government want to track your turnover as you are carrying out transaction. They want to be receiving a lot in the office. That's what it means if you don't understand, okay? So that by the end of the year when you file your return, they want to track how much turnover has run through your business, which they have also captured in their books. So if they are speaking one English, you don't understand, that's what it means, all right? Okay. Then we have individual taxation. Yeah, this is our own. Jibola already explained that if you earn 20 million and below, your tax is reducing somehow. But if you earn above 20 million a year, your tax is also moving upward, okay? And there's not too many relief. It's just to ensure that you take all your provisions that you are supposed. Children are also liable to tax if you don't know. Okay, the issue around rental relief, I will talk about that. It is not a relief per se. That provision was inserted so that as a tenant, you can give information to your employer to show that you have paid certain amount of what? Of rent. And when you give that information to your employer, the employer is supposed to intimate the tax authority to say that Mr. ABCD, who are my employees, paid rent to Mr. So-and-so during the year. It is just to give information of landlord. It is not a relief. So that the tax authority can go after the landlord. There are so many landlords that are not paying taxes, and government wants to know them. So don't take it as a serious relief, all right? Okay, because if you want to, it says the maximum is how much? 500,000. What is 500,000? If you put it on the highest tax rate, the tax implication is 75,000, so it's nothing. And that is why it is possible for husband and wife and children, if they are living in the same house and they are also working, to report the same landlord. Because the bottom line is report your landlord, okay? And so, I won't say more than that. Then there is the provision on accommodation. That is a major benefit, the provision on accommodation. Before now, in terms of accommodation, what are you supposed to pay tax on? We call it benefit in kind. That is applicable where your employer provides you with what? With an accommodation. Either the employer owns the premises or it is what? Rented. The employee is deemed to be in receipt of additional income equal to the rent paid or the annual value of the premises. We want to remove all those annual value of the premises. The law has now said that we are focusing on what? On the rental value. And they are now limiting it. So if you live in Banana Island, I know the average rent there is about 30 million a year for a flat. Okay? And your total salary, other than the accommodation the company is giving you, is 100 million. And then the company is now paying rent of 30 million, which means total is how much? 130. The law is saying that we want to limit how much you are taxed because of accommodation. It must not be more than 20% of other income other than the rent. So if you take 20% of 100 million, what do you have? 20 million. So instead of taxing you on 30 million that the company actually paid as rent, the law is saying, please limit it to how much? 20 million. So that at the end of the day, you are being assessed on a total of 120. Do you understand that provision? So if you are in such an environment and you want to take advantage, please exploit it. It is a benefit for high-income earners. All right? Yes. Okay, the guy is now rushing me. All right, no problem. Okay, can you move to major highlights? No, we have done major highlights. Corporate tax. Okay, I understand this is actually 20 minutes, so I want to be fast. Corporate tax. Yeah, the first one is the minimum effective tax rate for companies. Before I speak to that, one of the major issues relating to the implementation of this law or compliance challenge that I've seen is when does it take effect? Okay, are we looking at the 2025 account or 2026 account? Because the law says it takes effect, section 201, if you open it, it says it takes effect 1st of January 2026. Okay, if you look at all the finance acts that have been issued in Nigeria from 1999, is it 2019? 2019 to 2023. They have always been on, depending on exactly when the account was released. So if you look at the current law is still operational now. So many companies have prepared account. They have even paid interim dividend on the basis of the old law. They have not made provision for any tax in this new law. For example, no banks has provided for 15% minimum tax. The capital allowance has been computed based on the old law. In the new law, there's no longer initial allowance. It is your asset divided by 5, depending on the type of asset you have. So the huge 50% initial allowance that you normally enjoy no longer apply. All right, so should we actually be applying this tax law on 2025 accounts, or we should just apply it on 2026 accounts? That is for profit. It also applies to individual. If you are a sole trader, you are in business. Okay, what the law says is that the income you make in 25 as a business, an individual in business, or you're a partner in a partnership, or you are a director of a company, the money you generate in 2025 should be taxed in 2026. The one you generate in 2026 should be taxed in 2027. So are we saying that this law now, all the money you have been generating and you have been spending them, by the time you get to 2026, you now have to file your return with the tax authority within 3 months. Somebody has asked me within what period? Within 3 months, by March ending next year, you must be filling your Form A. Or, now we do it online. You must file your return as an individual. I'm not talking about company. You file your return, state how much income you have generated, whether it is by way of rent, by way of director's fees, by way of trading, okay? And then, of course, if you are an employee, your employer, that one will start in January. Okay, but the main issue is for businesses and companies, when should this tax law start? The Finance Act has been challenged by Akugas. They took FRS to court, and they won at the Federal High Court. FRS said they have appealed. I'm hoping they have appealed truly, but I'm sure, I don't know whether they will win. Because their argument was that you cannot tax me on an income that I've already paid, I've already spent. You are applying this provision retrospectively. Okay, so that is going to be one of the issues that we need to consider in terms of when implementing the provision of this law. We expect the FRS or the Ministry of Finance or the committee to issue guidelines and regulation as guidelines, for example. Okay, so whatever is in the guideline is not law. We must understand that whatever is in the guideline is not law. But if it is regulation, it's closer to being law. So as a company, as business person, you must examine the implication of this law on your 2025 and 2026. And then you have a grant to challenge it. If, for example, which I've also suggested, if the rate is reduced before January 2026, and I'm seeing that they are even asking me to pay tax at 25%, instead of the already 30% that I paid, what do you think will happen? Everybody will even fight to start the law. So, do you understand? And that is also in the provision of the law, that the rate can be reduced. So that is what I want to mention on that. But now, speaking to the few points here as quickly as possible, the minimum effective tax rate of 15%, that is applicable. It's not the making of Nigeria, unfortunately. It's a provision that was introduced by the European Community, the OECD, and that is to curb, base erosion and profit shifting. And so what it means is that if you are a member of a multinational holding company with a global or a group turnover of not less than 750 million euros a year, every entity that is a member of that group must pay a minimum tax of 15%. Okay, 15%. And so we're saying that if we don't implement that provision in Nigeria, we'll be losing to the other countries. Okay, countries, if we have Access Bank Ghana, for example, which is a subsidiary of Access Bank Nigeria. Now, if they don't pay enough tax up to 15% in Ghana, Nigeria have the right with this law to assess that company to tax for the difference, which we call the top-up tax. The top-up is the amount that you pay to make up to what? To the 15%. So that is just the provision. The unfortunate thing is that this provision in this law has not been left only to multinationals. They are saying if you're also a big company, starting from not less than 50 billion in turnover. If your turnover is not less than 50 billion, whether you're multinational or not, you also have to pay the 15%. Okay? But how do we do this? You do your normal tax computation like any other company, all right? Arrive at the tax liability, and then divide that tax liability by what? By your profit before tax. There are some lacuna provisions in the law that says that you can also adjust the profit before tax for 5% of depreciation, 5% of salaries and wages, whatever it is. The bottom line is that you are calculating effective rate of tax, which is your tax liability divided by your profit before tax. It is also possible for you not to have tax liability normally, because if you have huge capital allowance and there is no restriction on your capital allowance, you can use it to wipe up your total accessible profit. Is that not so? And then at the end of the day, you have what? No taxable profit or total profit. And then you have no tax liability. But if you have profit before tax in your financial statement, whether you have zero tax liability or not, the 15% will apply. And so we need to watch out for that. I'm not saying you should go and start making losses. So, all right. Then we have the issue around interest on interbank deposit and foreign currency domiciliary account. Before now, in the old law, all of these are, if you have interest in your domiciliary account, no tax is deducted. Going forward, those interests will not be liable to tax. For individuals, when tax is deducted from your interest, it is final tax. We call it franked investment income. Again, if you look at the old provision, when there is interbank takings, that is when a bank lends another bank money, even though there is a special definition for interbank takings, but banks have taken it as even interbank deposit. You carry the whole of your money, go and deposit, you say it's takings. All right? The law has said that whether it's interbank takings or interbank deposit, interest is what? Is interest. Anybody paying interest must deduct withholding tax and remit to the tax authority. And then if I also explain that further, there's recent controversy around whether there is even need for withholding tax on short-term securities or investment in a treasury bill, investment. Jimmy is looking at me. He's been writing letter on this matter. Investment in Lagos State, investment in treasury bill, investment in government bonds, and all that. There has always been question as to who truly is responsible for deducting the withholding tax. Is it the debt management office? Is it CBN? Is it the bank? Is it the custodian? Is it the stockbroking firm? And all that. The bottom line is that as far as interest is concerned, somebody must deduct. And the law says that the person that is paying the beneficiary should actually be the one deducting. If you are paying me interest, you should deduct. But there's also controversy as to if I invest in treasury bill and I don't hold it to maturity, you know you can trade in it, right? You buy security, you sell it, okay? Anytime you are selling your interest in any of those securities, you are getting benefits. And whatever you are getting is deemed to be what? Cum interest. And so whoever is paying you know the interest element at the point when you are being paid. And for that purpose, whoever is making payment, whether it's held to maturity, you hold it for 3 months, sell it to another person, whoever is at that point, banks are not likely to be able to exonerate themselves from the obligation to do what? To deduct. And I can see so many banks are complying, and Jimmy is very happy. Then we have, yes, interest on state government bonds are now exempt, just like we used to have interest on federal government. So when federal government issues bond, all right, there is no withholding tax. You don't pay tax at all. That has now been extended and expanded to bonds that are issued by what? By states. Okay, so I've mentioned those implications. Can you move to the next slide? VAT. Okay, I already explained this earlier, which has to do with the fact that when it comes to input VAT, it must be related to your output VAT. Okay, and I used those who have exempt income. If you deal in, maybe you are into export, okay? Exports are generally exempt, or some of them are zero rated. So, which means because you are not liable to VAT on your output, it is impossible for you to, if it is zero rated, what the law says is that when an item is zero rated means the rate of VAT is what? Is zero. It's different from exemption, okay? Your VAT output will be zero, but you have so much in input that you want to claim. So in that situation, what happens? You are eligible for a refund. And so on the basis of this law, you need to get ready. If you're in that type of business, you are continuously going to be asking for a refund from the tax authority. And they are also asking for government to give them a special budget so that this VAT will be easily refunded without audit. They said that they are going to refund without audit. The FRS man is looking at me. I'm not sure whether they will do it without audit, but that's what they said. Okay, the day they asked you to come and do audit for VAT, ordinary VAT refund, please tell them that the law says it's ordinarily supposed to be without audit. And within how many days? 30 days. And you must apply not longer than 90 days. Write it down. It may be useful later. All right, then we have fiscalization. That is where the e-invoicing is coming from. That's the one that actually gave the law that backs up the e-invoicing that have started already. All right, and I already explained to us the implication of that. That is done everywhere in the world most times. By the time you buy things on the street of London, the VAT is being reported to HMRC and all that. So the same thing is what is being implemented, such that your transactions are captured by the tax authority. Before you even finish preparing your financial statement, they will send you one copy because they have prepared it for you and telling you how much your turnover is, telling you how much your cost will be. In fact, they will give you an estimate of what your tax liability may be, and there will be little room for corruption. All right. Then we'll move on to exported service. And that is still on VAT. Exported services have been well defined. Sometimes the tax authority wants to tax you on export and tax you on import. When one is exempt, the other one is taxable. Exported services are exempt. And what do you mean by exported service? A service that is consumed by a person that is not resident in Nigeria. Whether you go there to go and render the service or you are rendering it from here, as long as the beneficiary of the service is not resident in Nigeria, it is an exported service. That definition has been clarified. Before now, tax people used to argue that you cannot export service if you don't travel. Where's your traveling ticket? Exported service is when the beneficiary or the person enjoying the service is not in Nigeria. I can write an opinion from Nigeria to somebody that is in UK, and they will pay me. I don't have to go to the airport. But the law now has clarified it very well, underlined. And then we have imported service. You know the reverse will be the case, right? If you're in Nigeria, you're enjoying service from somebody that is outside Nigeria or sending the service. As long as you are in Nigeria, you are importing the service. And of course, VAT will be due on that transaction. Companies should also get ready for that. I actually have some calculation to show you how the input-output mechanism work, but I'm not sure we have the time now, so let's just move on. Don't click. Don't click. Where are we? Okay, so this is individual taxation. This is our own tax now. Yeah. I am always proud to pay my tax, but what we now know is that there is no longer minimum tax for individual. If you don't have tax liability, the issue of 1% minimum tax no longer apply. If your taxable income is 800,000 and below, you are also exempted from what? From tax. 800,000 means after so much has been deducted from your income. For example, if you have pension contribution, it has been deducted. If you contribute to health insurance, it has been deducted. If you contribute to housing, it has been deducted. If you borrow money from bank to build your own house and you are paying interest on mortgage, that interest has been deducted. And if at the end of the day, all these have been deducted, and your income is no more, the balance is no more than what? 800. So it's not like 800,000 is the income that is exempt. Do we understand? After the deduction, we call it, this balance is called what? Taxable income. The one that is taxable is now 800 and below. There is no tax. The next 2.2 million after that, you pay 15%. Okay, so which means up to 3,000. The next 9 million, at the end of the day, like has been analyzed, depending on your income bracket, your tax is either going up or coming down. But for the high income earner, whether you want the rich to save their money and build more refinery or not, government needs money immediately now. There is still balance after you have paid the tax. If I'm in my church, I tell them, don't pay tax if you have not paid tax. So God will reject the money. Pay your tax and then pay tithes. Then you can be sure maybe you make heaven. So, so that's the tax table. I already explained the issue around accommodation and BIK. I also mentioned the issue around all these deductions. This thing is supposed to have a pointer. All the deductions that you are also eligible to deduct. I have outlined the employer's compliance obligations starting from January. You must ensure that those who want to claim the 500,000 we discussed earlier are also getting ready, compiling their receipt to their landlord. The receipt must have address and name. Okay, just send it to your your tax manager or your account unit. They will claim the relief for you. You know, we have always been claiming relief. So it's not new. A lot of us have been claiming children allowance, life assurance, dependent relative, even when you don't give them money. So it's very easy to claim the relief for the accommodation. Okay, this is just an illustration. This man is now understanding my slide. Though. Okay, you can have illustration, don't worry. Just let's move on. They will pay me to learn that. Okay, move to the next item. Right, okay, just to point out some of the new provisions and the implementation issues, okay, that you need to deal with. I have mentioned gaming and lottery. Gaming and lottery, there used to be a parallel provision under the Gaming Act of an old Gaming Act that allowed gaming and lottery companies to be taxed at 7%. That has been subsumed by this provision, no more 7%. They are now all going to be liable to tax at what rate? 30% or hopefully 25%. In fact, some of us will be praying for this 25%. because even the chairman of the committee has been saying it as if the law has been passed. Okay? All right, so specific provisions relating to gaming, whatever is allowable for other companies are also allowable for them. They also have specific deductions that are now have to be taken into consideration, which I will not go into. For oil and gas, there are very few provisions that change, and the reason is not far-fetched. We just had the PIA passed into law, right? After 20 years of amending, and eventually it was passed. Anybody that wants to amend it will do a lot of work. All right, so just a few things. What I will only point out for the bank is the fact that there is an amendment in the oil and gas provision that says that you must make provision, when you carry out exploration on an oil area, you must be preparing to restore that provision, that place to what? To the way you met it. Okay, decommissioning, okay? And so the law now says that although this decommissioning provision that they've been keeping maybe abroad, they must now invest it in Nigeria. Okay, so Access Bank, go and meet FRS. There's opportunity to be part of the investor of that money. Insurance company, nothing serious have changed as far as the insurance taxation is concerned, other than all of these new provisions are also applicable to them. What is new for insurance is the fact that, because of the high risk that they insure, sometimes they do what? They do reinsurance in outside Nigeria. And those people just collect premium from them and they don't pay tax. From this law, for reinsurance company, there is a 4% that is applicable for those foreign companies that insure all those high-risk projects. And that is the new provision. So it's a flat 4% that will be taxed on the premium that you are paying to a non-resident insurance company, because they're the one that normally does this reinsurance because of the risk that is involved in that transaction. Insurance people are not happy, but that's the law for now. Business restructuring provisions. Okay, that has to do with merger, takeover, acquisition and all that. So what we had in the old provision is that when there is a merger of two entities, number one is that you have to inform the tax authority that there is a merger. And then there are issues to deal with. One, are you going to apply commencement provision or cessation provision? Is the company that is taking over being deemed to have ceased? Are you going to apply cessation provision? Is the new one, if it is a new one, going to start? Are you going to apply commencement rule? What happened to the assets of the company that you are subsuming? Are you going to take them as a new asset, or you take them at their tax return value to be written over the unexpired life? Okay, what happened to the losses made that is accumulated by the subsumed entity before a company is merged, or they probably have some losses, right? What we used to have is that your loss is lost. Tax authority will just wave you away. It's like you are taking only the good thing. The law has said that where there's a loss in a company you are merging with, the surviving entity should be allowed to take the loss and relieve it as long as possible. Again, the assets are taken at their tax written down values. Again, where a subsumed entity made, or has credit note that they have not utilized, the credit note are now available to be utilized by the surviving entity. These are the very important highlights we are going to be seeing in the implementation of the new law, which businesses must take note and know that they are there for them to enjoy. And if you don't apply, you don't get it. Tax authority will not remind you. I can show you. Oh, Burugo. Then we have, okay, so that is as far as that business restructuring is concerned. Move on, please. Okay, these are basic strategies that we have just highlighted that you can take a look at. Entity you should structure to optimize whatever business that you're doing. Review your businesses before 2026 start now. Ensure that you have carried out a review of your businesses. If there are exemptions that you are taxing, make sure you now put it, relate with your account unit. For example, a complex institution like Access, the interest that you have exempted before make sure you liaise with the relevant unit of the organization to ensure that they streamline. And why? There is penalty. The last slide is full of penalty and interest for non-compliance. I'll just show you a few when we get there. Right? Go back. Sorry. Then we have transfer pricing compliance. These are obligations for businesses where you have related party transaction. Always ensure you have your proper documentation in place. Okay, do your benchmark analysis. Speak to who? Speak to me. I will tell you how to do how to do benchmarking, and then so that when the tax authority come to evaluate your transaction, you will have carried it out within the range provided by the analysis that has been done, and then you can be happy. All right. So there are tax incentives that also have been listed. There are several incentives that are in this law. If you go to the provision relating to exempt income, okay, there are a long list of exemptions if you are into exports and a lot of others. So you need to get familiar with them so that you don't continue to pay tax on what is now exempt. Work out how you can utilize your loss. Losses can be carried forward to subsequent years indefinitely. All right, so don't throw away your losses. International tax consideration is very key. I've mentioned a lot of those international issues. If you are, the guy is getting close now. If you are into maybe air and sea transport business and you are not a Nigerian company, what are your obligations in Nigeria, like the Virgin Atlantic of this world? Are they liable to pay tax in Nigeria for whatever reason? Those are things that you must consider as an entity. Then operational management and compliance are obligations that companies must sit down. So it's not something you just go through. Somebody will come and tell you about the law and you think you are now an expert. You need to ensure that each unit, because as soon as the specific units are not compliant, the tax man will not even know what is happening. There are so many companies that give out foreign loan, take foreign loan. The tax unit is not aware, and you have obligation to deduct taxes here and there that are not being taken care of. Okay, so you must be robust in preparing for the implementation of the law, because the tax authority are preparing. If you don't know, guidelines are being issued, and we have not seen the guidelines for now. And January is very close, and they are likely going to assume that immediately they issue it, you understand. But it's not easy to understand some of these things. So prepare for yourself. Get familiar with all the provisions. There are 4 tax laws. The Nigerian Tax Administration Act, some people have not opened it. They're just looking at the rate of tax. They don't know that the tax authority can seal their businesses. You cannot just send any consultant. Consultants are now to be registered, okay, and approved by the tax authority. Whether you are top 4 or top last, you must be registered with the authority to be able to file returns. Those provisions are there. There are provisions in the law that says that if you have any tax planning arrangement that you want to implement, tell the tax authority. Because if you don't tell them, it's going to be taken as if you are engaged in what? In tax evasion. So your tax planning proposals must be made available to the tax authority for their knowledge, and maybe you can even get advanced ruling where you truly want to obtain that. All of those provisions are in the law. Thank you for listening. Let me stop here. All right, okay, sorry, this is important. Offenses and penalties, they are down there. The tax authorities said I must point it out to you because that voice came from the center. I'm not looking at them. Offenses and penalties. All right, failure to register for tax. The offense is 50,000 for the first month and then 25,000 for each subsequent month. So if you don't have a tax identification number, whether it is the JTB number, because people have been calling me, I have JTB, I don't have Lagos State. I have Lagos State, I don't have FRS. All of those are going to be synchronized. I hope that the JTB secretary will also say something when I finish relating to this tax identification number, because some people think that from January, government will just go to your bank account and begin to apply tax rate, 30%. Oh, see this person, he has plenty of money, 50%. No. It is only where your bank account is at variance with your tax returns. And you know that at the end of the implementation of this law, there's something that is also coming, which is going to be a voluntary declaration. But before then, you need to be compliant. Don't be afraid if you are compliant, or people give out their account. If you want to transfer money, just use my account. You start paying tax. You cannot explain. Because if they're looking at your account and it's so robust, and your tax clearance is looking like some people pay 300,000 naira. That's even big for some people. All right? Don't allow your account to be used for transactions you cannot explain, because they have access. Even before now, they already have access, right? And they are going to be doing data mining. They are gathering information. You are registering your car, new car, and your tax clearance is reading 1 million. Where did you use the car? All right, so they are relating those provisions. They have the photo, when they send assessment for land use charge in Lagos State, for example. If you go and complain, they will give you the picture of the house. So they know your house. And if you are claiming something that is different from what you are supposed to be declaring, they have the information. And so there are plenty penalty that you can incur. And then the offenses are well listed. Failure to deduct and remit withholding tax. There was an issue around for small companies. How do I know it's small? Whether you are small or big, if I'm deducting withholding tax, I'll deduct, except you pre-inform me. In fact, I want a letter from the tax authority to say that this company is small, please don't deduct. Otherwise, you'll be held liable. For VAT, for small companies, whether you are small or not, the company you are dealing with is required to self-charge. So if you inform me that you are a small company now, instead of you charging me VAT, you are not going to charge. But the law says, me that you are dealing with must what? Must self-charge. We call it reverse charge. I will charge myself VAT. That VAT I'm charging myself, I will use it to reduce my output VAT. Okay? And you're even supposed to file that reverse charge returns before the normal return within how many days? 21 days. They expect you to file the return for reverse charge so that they can also post it to the account of the beneficiary so that they can utilize it as well. All right? Thank you so much. My time is done.
Thank you very much. Another round of applause, please, for Mr. Folorunso Albert. So we're going to take one question. And before that, I would like to specially recognize the presence of our Deputy Managing Director, Chizoma Okoli. She's just walked in. Can we give her a round of applause? So I'll take just one question in order for us to free you very quickly. So there's two people. Are you going to choose? Okay. He's raised his hand first.
Thank you very much, Mr. Folorunso. My name is Babatunde from Pampe. So I know the definition of Nigerian company has been expanded to now include companies where their effective place of management is in Nigeria. So I want you to explain further, what does it mean by effective place of management? Because we look at banks today, we have subsidiary. Does it mean if you don't have boards in those countries, or if the MD in Nigeria controls those subsidiaries, then the profit of those subsidiaries will be taxed in Nigeria?
Thank you. Next question.
Thank you very much, sir. There is something I observed during your presentation. I could say that all businesses are captured, but telecoms industry wasn't there. So I would like to know. Thank you.
Can you explain your question?
When you were making your presentations,
yes,
you mentioned down to insurance companies.
Okay. All right, I understand now.
You understand?
Yes. Okay, so the first question from Tunde, he wants to know the new definition of companies. Of course, world over, that is a general definition. Please, a company is either a Nigerian company if it is incorporated in Nigeria, okay? And we're now including a situation where if a company is not incorporated in Nigeria, but it is effectively managed and controlled from Nigeria, that company can be deemed to be what? To be resident in Nigeria. Okay, and so if the fact that you are deemed resident in Nigeria does not mean that you are also not liable to tax in your actual place of residence. So if you are in Ghana, that is your place of residence. You will have paid some taxes there, all right? If you are deemed to be resident in Nigeria, your tax will also be calculated, and it is possible that you may get some reprieve for foreign tax already paid. But what it truly means is that if you continuously hold your place of management can be where you hold your board meetings. If board meetings of companies are continuously held, maybe in Nigeria, we can assume that that company is what? Is resident in Nigeria. Okay? Nothing special, right? Now, telecom. The provision, I only mentioned a few that have special, peculiar provision. As far as telecom is concerned, power companies, nothing special in the law. They are liable to the normal minimum. I mean, if their turnover is above 50 million, they are liable to the minimum tax. If they are located in free trade zone, the provision relating to free trade zone are also applicable to them. If they engage, if they are able to obtain the certificate for development incentive, everything applies to them. Their employees are liable to pay tax. If you are working there, you are liable to tax, please. Thank you.
Question from a lady, just one more question, sir. Okay, she's already had.
Hello? Thank you very much. My name is Ayodele. I'm from Sagvin Nigeria Limited. My question is on the self-charge VAT. Because from experience, the average business person, particularly the enterprise, they are not actually willing to register for tax or any other thing. As a business, we are supposed to self-charge them. Now, what happens in this situation we have as a business, the vendor has refused to register for TIN, and we have actually engaged them, and transaction has taken place.
You sacked them?
No, the point is we are under audit. So the FRS is asking us to self-charge and pay because they've not done that. Because VAT has not actually reflected on their invoice. So what are the safeguards for businesses? Because I presume this is additional burden on business that are complying. So if you are asking us to be running after those vendors that has refused to register as a corporate registered taxpayer.
Okay.
So what do we do? Secondly, second question is actually on the interbank deposit. When you say interbank deposit, let's assume I have Access Bank account as a business, and I have other bank which I'm banking with. Yeah, I'm not calling bank name now. So now the point is, if I'm moving from my Access Bank account to my other bank account, is that what you are saying? That is okay. I want to get clarification from that. Thank you very much.
Okay, so on the self-charge, that is a provision that was introduced when the threshold for small companies was also introduced. And it was meant to ensure that no tax is lost, even though you are trying to reduce the tax burden and the stress of the small enterprises. With turnover of 25 million, it has now just been increased to 100 million. And so if you are dealing with such, or any enterprise or any company that refuse to register, you are not supposed to deal with such entities who fail or refuse. And if you have already dealt with them, the obligation most time becomes yours. You are supposed to self-charge and file those returns. And if you don't self-charge, you have to pay. So companies always carry out due diligence on their vendors, and it is very much more important now. Even for small businesses, it is not, even if you are under the threshold and you want to be recognized as a serious business, you need to, you can go ahead and register because you are also eligible to claim your input VAT if you have registered even though you are below the threshold. Okay, we see companies that are in that type of scenario, they just register so that the companies they are dealing with will not be stressed, because immediately you are telling the company you are a small company. It's also thinking of dealing with people that are serious. It does not show seriousness if you say that you are small and therefore I am not going to obtain things. As long as you are not the only person selling that item in Nigeria, they will move on. Thank you, sir.
All right, sir. Yes, sir.
Good afternoon, sir.
Okay, good afternoon, sir.
Okay.
Yeah.
What is interpreting?
Yeah, sir, on the side of personal income tax, PE, yes, we talk of 500,000 rental relief or 20% of gross income. Is there a way a company can incorporate such relief on the payroll for all the employees, knowing quite well that each employee pays different rent?
Yeah. Okay, then the second one.
Yeah.
Good
afternoon, sir.
Good afternoon.
Sorry, very quick question for those of us who are distributors to multinationals in the FMCG space,
yeah,
where we distribute, and actually the turnover most often is huge, and we're dealing with people in the markets. Yeah, that's one leg. And the money going into the accounts is huge because the value of the products are actually high. But these are consumables. Yeah? So in that aspect, you have not actually dealt with that. Okay. That's one, sir. Then talking about dealing with vendors and all of that, because we are distributors, we have vans, we have trucks, distribution vans. And most often, when they break down, we get mechanics and all of that. So I want you to just help a number of us who are operating in that space as to how we go about this new task.
Okay, I will respond. Access, I've paid for it.
Thank you, sir. Thank you.
Okay. Okay, so I will answer your question, which is you want the 500,000 to be general. The authorities are hearing you. That you just, don't worry, you just take, why are you asking us to bring receipts now? Next year, it's a yearly thing. Next year, you enjoy another one, whether you pay rent or not. Okay, I will let them know. But I know that sometimes there are relief that are not too significant, that states will not waste their time pursuing the evidence. But the only reason why they need that information is because of the landlord. They are not interested in your 500. Well, how much is the tax? Assuming you are in the 15% threshold. You think that's what is giving Lagos a trillion? No, it's those landlords that, depending on where your landlord lives, you must not allow them to know. Otherwise, you will not get your property will be out of. But let me answer, madam. So for businesses, it depends on how you operate. Are you operating as a sole trader, or as an enterprise or Joe & Co., or as a limited company? You said your transactions are big. As an enterprise, yes, as an enterprise, the tax is on you as a person. But that does not stop you from preparing accounts. You still need to prepare accounts, because if they are seeing huge transaction in your account, it means you are also, maybe you just have a margin of 0.0 something. You must be able to explain that with account so that they will see how much margin you have made. And even from your margin, you still have to take out your expenses. And even as an individual that is in business and using trucks, you are eligible to claim capital allowance on the trucks. You can claim capital allowance, you can take deduction, your driver's salaries, the money you pay to the agberos on the road if you give you receipt by one way or the other, and all that. They're all deductible. And then somebody, Jibola was saying taxes are not deductible. Those levies are deductible. They are not taxes. The taxes that are not deductible are income taxes. If you pay levies to authorities, you can deduct it as an expense, as long as it is not for, the law provides some that are not deductible, particularly where they are fined Okay, they are fine like that. But if it is levy that you pay for your sticker on your cars and all of those, they are tax deductible. Thank you, sir.
Thank you, sir. Just 1 minute, we'll present a gift to you. Thank you very much. And another round of applause for him. Can we please invite our Deputy Managing Director, Chizoma Okoli, to present a gift to our speaker, please. Thank you. A round of applause for Chizoma Okoli, please.
Thank you very much. And apologies that I came in late. We've had several events today. But of course, every event is very important, particularly this one. So that's why I have made sure that at least I appear here today. We're very grateful that everybody was able to come today. In fact, I'm very thrilled by the number of people who are here and all the our very able tax experts who have decided to go on this journey with us. We're very grateful to you. So part of the things that we pride ourselves with in Access Bank is that we try to follow the money. And so when we are following the money, all of the sensitive things that have to do with the money, we try to talk about them. This is also one of our non-financial services that we provide to our customers, because when you succeed, we will succeed. So again, thank you very much. He asked me, he whispered to me when I came and he said, have you paid tax on this? And you need to trust us. You need to trust us. We are very compliant, and that is why we want our customers to be very, very compliant. Thank you, everyone. And I know that you are receiving a lot of value from coming here today. Please ask all your questions. I was very excited when I was listening to the questions. Thank you. But rest assured that Access Bank, we will continue to support you and support your business to grow. Thank you. So on behalf of the entire staff and management and board of Access Bank, we say a big thank you to you. And so this is our token of appreciation to you. Thank you.
A round of applause, please. Thank you very much. A round of applause. I know. So we're rounding up, and we will round up now with a very, very robust panel discussion. This panel discussion would have three panelists, three very, I'll say, distinguished panelists. The first person I would like to invite Thank you, thank you, thank you. Thank you. Thank you, thank you. I would like to Okay, I have the distinguished pleasure of inviting the Executive Chairman, Lagos State Internal Revenue Service, Mr. Ayodele Subari, FCTI, FCA, to join this panel, please. And followed by our distinguished Professor Abiola Soni, the Dean, Faculty of Law, University of Lagos. And the Executive Chairman, Kano State Internal Revenue Service, Dr. Zaid Abubakar, to please also join the panel. Can we give them a round of applause, please? Okay. Thank you very much for joining this panel. So we've had very robust discussions today. The first paper touched on opportunities for SMEs and benefits, including recoverable input VAT refund. The second paper touched on opportunities for the public sector. And finally, we discussed navigating tax compliance. To begin, I would like, before we go into specific questions to all three of you, I would like to get your general remarks and reactions to the discussion so far. Just in 2 minutes, everyone just give your general remarks and we'll go into specific questions. We can start with you, Prof.
Well, thank you very much. In terms of business friendliness, I don't think we've ever had this good. If you look at it, the reliefs are so many that you begin to wonder, where will the money come from? The money is going to come mainly by repositioning the tax authority to focus on the big tickets. And that is the people at the top of the pyramid. So for those whose taxes will go up naturally, they have to recognize that they are part of the people who are doing well in the society. And the principle of taxation is that the people with the broadest shoulder should carry the heaviest burden. It might look very heavy at the moment, but whether you like it or not, that is the way to go in financing the public sector. It's going to force us to pay attention to who governs us, so that the elites do not leave governance to those who are in the third level. So that is one major thing. And in terms of accountability, like I said, there will be very little we can do. So I want to reiterate my suggestion that as a bank, Access should look at the social impact policy so that it can do more in terms of penetration and in terms of touching what is important to your customer. So develop something that will be more meaningful. In the VAT space, I think we are just beginning to understand VAT, and I mean it. What we had in 1993 was really not VAT. It was at best a pseudo VAT. If you look at the Jiwere's committee, it even said modify value-added tax, because if you don't allow input VAT to be deducted, what you have is not a VAT. And all the people who are still struggling with whether they should be on board or not, it means they also don't understand it. It's the biggest incentive that a business can have. And I'm happy that there is a clause in the law that says that even small companies can also opt out. And I think Pedabo spoke about that. Because if you are a small company and you won't get certain businesses, it may be in your interest ultimately to register and then claim VAT. Finally, we may be happy about executive order intervention to reduce the rate from 30 to 25. For me as a lawyer, you need to look at the sustainability. So if you allow executive order to reduce the rate of tax from 30 to 25, a time is going to come when executive order will also work against you. So that means you wake up today, the tax rate has gone up.
as we see in America, where the president thinks that he can use executive order to do whatever he likes. And you see the reaction of the court. So my specific concern here is that someday we may wake up and see that there is now a surcharge on fossil fuel, also through executive order. So for me as a lawyer, taxation should be for the legislature. Thank you.
Thank you, Professor Sani.
Good afternoon, everybody. First, I'd like to commend Access Bank for this forum. It's going to add a lot of value, and it's going to help reduce the communication gap that is present right now. First. Secondly, I really pity a lot of the guests here, and I pity them because of the sheer volume of information that they have to assimilate today, especially for the non-accounting guests that are here, the ones that are not too familiar with accounting and taxation processes. But don't be discouraged. Hope is not lost. You can always go back and, you must engage consultants if you want to really understand all the principles that have been discussed here today. Then I also would like to advise that for a lot of businessmen, don't take taxation as a moral burden. Take it as you being a participant in improving the development of our dear nation. Take it as your contribution when you are paying taxes. And then don't be discouraged. There are a lot of people out there who are saying a lot of things that are not factual. Always endeavor. A lot of us Nigerians do not like to read. We need to read. We need to understand all the principles, because these tax reforms are going to be very beneficial to the nation. We shouldn't look at it as a means of generating revenue. All the tax reform is not about generating revenue. It's also about creating an enabling environment for all the businesses. It's about improving accountability. It's about improving transparency. It's about reducing corruption across the whole sphere, be it from the private sector or from the public sector. So once again, I'll commend Access Bank. And there's still a lot more that is to be considered. I think Jibola made some comments on approved taxes and levies. It's not exactly an omission, and there's a lot of work that is still going on, and I'm sure members of the public will soon be informed on the uniform approach that is being designed and is expected to also come into force on the 1st of January 2026. So we know that a lot of people at the grassroots level are affected, especially by the operations of maybe local governments, and even non-state actors have come into the system. All these issues are still being addressed, and it should come very sooner than you think. Thank you.
All right, thank you. Sorry, I'm an accidental panelist. I didn't know that I'm going to be part of this panel, but just a few minutes away, I'm drafted to be part of this panel. Well, for me, the reform are here to stay, and we've succeeded in having the laws passed. But we have a lot of, task ahead of us, both the revenue administrators and the taxpayers. On the part of the revenue administrators, how ready are we to really implement these laws? Because it comes with a lot of complexities and demands from the part of the tax authority. During the course of all the presentations, a lot have been said about digital readiness, whether the revenue authorities do have all the necessary requirements that is needed for us to really implement these laws. On the part of the taxpayers, just as stated by my colleague here, a lot of information has been passed through these presentations this morning. How ready are the taxpayers, in terms of compliance come 1st January 2026? These are things that we need to sit down, domesticate, and digest for us to be able to, deliver on that promise of the reform, which is higher revenue generation to the government and stuff like that. So this is my initial comment.
Thank you very much. So we'll go into specific questions now, and I would like to start with you, Mr. Ayodele Subai. So I have two questions for you, actually. Can you throw more light on how the new personal income tax will be implemented in Lagos? That's the first part. And how is the Lagos State Internal Revenue managing the problem of multiple levies and taxes in Lagos?
Thank you. So I'll take your first question. The personal income taxes, all the policies, all the laws are enacted at the national level. So the way Lagos is going to implement the personal income tax side of things is going to be the same way Kano is going to effect it, the same way Enugu is going to effect it, Kwara. So to ask how Lagos is going to affect it seems funny for me, because we're all going to approach it the same way because it's a federal law. But coming down to how we intend to, we unfortunately are regulators and we are guided by the laws. So we are going to affect it based on the laws, not based on our own interpretation, but based on the actual law. Presently, we're managing personal income taxation also through all the extant provisions of the law, except you want me to ask you if there are any areas you're looking at, because everybody knows that Lagos, we're very proactive. We have invested in a lot of digital infrastructure over the years, and we are highly automated. We have the e-tax solution, which is an end-to-end tax administration solution from registration right up to issuance of payments, receipts. You can actually generate your tax clearance certificate if you are in full compliance with all the processes and all the procedures. So we're going to continue to administer all this using our e-tax platform. We're still working on ensuring that all the processes are fully captured on our platform. We're working on all the templates because the templates are going to change now based on all the new provisions and all the various sections. Everything is being reflected. We are also building a lot of capacity at the moment. We are making sure that we are training our staff so that everybody has a firm understanding of what is expected of them. So I would just generally say that we are going to be well prepared, just as we have always been well prepared. So the second part of it, has to do with the harmonization of taxes.
Multiple levies and taxes.
Yes. So in my opening remarks, I think I mentioned already that we're already looking at how, because the previous legislation has been repealed along with these new laws that have just been passed. In other words, we expect that there's going to be a new set of regulations that are going to come out. If you heard the chairman of the presidential committee, he kept on saying that whereas we had about 65 taxes in the past, levies, taxes and levies and rates and administrative charges, we had over 65 because they had an exercise whereby they invited all the states to send in all the types of levies and rates that they have, and it was over 65. And right now it's been pruned down to a single digit. So even though it's the nomenclature may not have changed, but a number of levies and rates have been merged together to have just one single heading. So we're operating on a single digit basis. So in the past, it's not been very easy to manage the proliferation of all these different charges, because there are 3 tiers of government. You have the federal government, you have the states, and you have the local governments. And each one is supposed to be independent and almost autonomous. So it becomes very difficult for the state to control all the actions and activities of the local governments. But there's a concerted effort that is being made. There's got to be harmonization. It's very, very important. Not just harmonization of these taxes, it's also got to be applied uniformly across the nation so that any foreigner or anybody who wants to do business, can look at the code and know what to expect. No business should start, and while they are operating, they keep on being hit by all manner of rates and taxes. That means you can't even plan, and it will affect your business. So part of the benefit of this new drive will be not just to harmonize, but to ensure that the business climate is clean. And when I say clean, through ease of doing business actions, we want to make sure that everybody has a fair chance of doing his business and not to be surprised by all these levies. So we all look forward to when the regulations are going to be released. Of course, as the Joint Revenue Board, previously JTB, is doing a lot of work in this regard to ensure this harmonization.
Thank you very much. And I would like to, in that same vein, just invite Dr. Zaid and just tell us about how you're managing informal sector collections in Kano State.
All right. As a rider to what Lagos said, I think chunk of the work on that harmonization before I come to the informal sector now lies with the states to adapt to this new Reform Act, work with their state assembly to ensure that that harmonization is being achieved. Because without the state assemblies and the Internal Revenue Service is doing much alongside their governors, that harmonization that has been promised might not be really achieved before maybe 1st January or first quarter of 2026. So a lot of the work now is with the states to ensure that happens before any constitutional amendment that has been mentioned initially can happen. Because if we are going to wait for the constitutional amendment, that would take possibly another year before we achieve that harmonization. And that is what the SMEs are really waiting for. If that harmonization doesn't happen, either before 1st January 2026 or first quarter of next year, the promises given to Nigerians is already dashed out. It's thrown under the bus. So I think it's up to us, especially coming from the subnationals, to ensure that harmonized, draft law that is shared by GRB is being worked upon before, 1st January 2026. I know most states, have embarked on that journey of doing the adaptation review to ensure that that happens. Now, coming back to your question about informal sector, it has been a common knowledge across Nigeria that informal sector constitutes close to 70% of our taxpayers. And chunk of what is being done under the Reform Act is actually to allow these guys to breathe. So in our own case in Kano, because we have, the insight of what possibly might come out of this reform, we took time to analyze the law as it is, especially the Nigerian Tax Administration Act, taking the combined effect of Section 2, Section 4, and Section 13 of the NTAE, we try to do what we call tax deepening and widening. It's a new concept from Kano anyway, that we have to ensure we do mass registration of taxpayers. I also want to clear one misconception that I often hear when we have this type of forum, that you are at liberty to register. The taxpayers with this reform may decide not to register. I think that is wrong. Everybody must register. If you look at section, because we are, we can make that misconception when we specifically look at section 4 of the law to say when you request for tax ID, or section 7, sorry, that talks about tax ID, because it says, it uses the word request, meaning that you may not decide not to request from tax authority. But when you have the combined effect of section 2, section 4, and section 13, it is mandatory upon every taxable person, Nigerian, either limited liability company or an individual, to register for tax purposes. So on the basis of that, we come up with this idea of mass registration. The target is to register a minimum of 3 million taxpayers in Kano, both formal and informal, and we've started that. We identified like 5 markets, which are majorly informal sector market, starting with one of the biggest agricultural market in Kano. Anybody that is familiar with Kano, know Dawano. It serves the sub-Saharan Africa. And this is a market that is really doing big in cash. So another angle to it is financial inclusion or exclusion, depending on how you want to call it. Kano is one of the states that has the highest rate of financial exclusion. So the informal sector is beyond what we really understand as informal sector. These guys, trade on cash basis. Going to bank is alien to some of them. It's not as if they are not even educated. They are educated up to master's level in some instances, these traders. But there is this historical, dimension to it, that having a bank account is something else. I don't want to go into that. So what we are doing is to ensure that we go stall by stall, register these individuals, shop by shop to register them. So we'll come up with what we call the marketing squads. So we deployed our staff on the street. It's a lot of legwork we are doing. So with this requirement, that is why I started by asking us, the revenue authorities, how ready are we to implement these laws? Because at the subnational level, especially, there is going to be a hard hit on the subnationals because of the, high level of waivers, incentives that are given to the taxpayers, especially the individual taxpayers, starting from the 4th schedule of the law, section 56, that says 800,000 threshold. If you are not up to that, your chargeable income, not up to 800,000, you are exempted. That is where the subnational get a lot of the money, especially some of us at the rural states. Don't mind Lagos. Lagos is already knowing where he makes his money. But for some of us, the last ladder of the pyramid, that is where we make most of this money. Now, that is wiped out. So we need to do this mass registration to ensure that everybody is in the tax net. Then we deepen. I said the idea is to deepen and widen. So by the time you do the wide mass registration, you can now take time to deepen, to categorize the taxpayers into layers. Those that are eligible to pay and those that aren't eligible to pay. This is exactly what we're doing. So far, when we started like a month ago, we're seeing the numbers increasing. People are beginning to comply to a certain level. And we hope before the end of the year, we'll be able to register at a minimum of 1 million taxpayers, especially targeting the informal sector. That's what we're doing currently. In addition to that, when you look at section 7 to section 10 of the NTAA, we keep on mentioning tax ID. But we haven't sit down to define what that tax ID is. Are we going to be using the GRB tin that is being issued, which is just a number that doesn't go beyond that number? It's not really active to a certain extent. We are going to use the FIRS tin, which is a different number on its own. We are going to use the local tax ID at the state level, which is also a different thing entirely. So we need to also address what I call digital disruption, digital identity disruption, before we are able to achieve the full benefit of these reforms we are doing. So a lot of work beyond what the revenue authorities are doing, either at the central, which I mean the NIRS, or the subnational. We need the third party, in this case, the technology ecosystem, to assist the revenue authorities to be able to achieve this. That unification of digital identity must happen, because the entire reform is premised on technological advancement. If we're unable to address that, then the promises will be thrown under the bus. That is what I have to say on this. Thank you.
Okay, thank you very much. Dr. Zaid Abubakar, for that very detailed answer. I will now go to you, Professor Sani. So we have sort of a two-part question for you. The first is essentially to give you the flexibility to give your thoughts around this new tax law. And I think the question is, do you think it is complete? That's the first part. But the second part is, do you envisage that we will have a high level of litigation incidents with respect to this new tax regime? Do you, litigation with respect to this new tax regime? So the first one is, do you think the tax law is complete?
All right, thank you very much. In terms of completeness, I can say it's comprehensive. Attempt had been made to address as many moving parts as possible, and then also to deliver it in a form that people can access it. When I started my tax journey, there were provisions I couldn't locate for months, because they were scattered in. So all those things will be addressed now. But much as we say taxation is statutory, we must recognize that there are also other sources. There are other sources of law. In our discussion of the four statutes today, we must underscore that the real tax statutes out of these four are two: the NTA and NTAA. The NTA is the one where you have all the charging clauses that tells you what is charged, when and how. Then the NTAA is how is it administered. So the two others, they relate to establishment of agency. I'm happy the ES of the JRB is here. An average taxpayer really has no business with the club of tax authorities, much that the establishment is for the promotion of the tax base. They have a lot of intervention, but in terms of interaction with the JRB, is not a direct one. So we are still going to expect guidelines, regulations. The tragedy we have in Nigeria is you have a law, and for a very long time, running to decades, there is no regulation. So a lot of palpable, visible issues arising are not addressed. I think we will do better this time. But in terms of compliance, the tax authority at the federal and the state level, we also have to proactively push out what will guide the taxpayers. We are here today in search of information. How do I do this? So for very important things, the tax authority should push out certain information that this is the right way to do it. They may not have legal bindiness, okay? But there is a way they communicate the right message to the taxpayer, and then it calms their soul. And also, let's see how some of these things will play out. In terms of litigation, of course, there will be litigation. If there are no litigations, how will the lawyers eat? I, for one, I'm a tax lawyer. I'm faithful to taxation. I do know they are liable to withholding tax. There are people who will dispute it. So it doesn't mean that the taxpayers will always be right. So at the end of the day, we have an independent body who will look at the arguments and then decide. So people may have their view about the law court or the tax appeal tribunal, but for us as lawyers, myself, Shegun, we are lawyers, we are tax lawyers. The most civilized way of resolving dispute is to go to court. And then you can also go to arbitration. So let me say a word about multiplicity of taxes. In my view, it is unfair to expect tax authority to deal with the issues of multiplicity of taxes when they are not the one who created those problems And they are also not the one collecting those charges. Okay, we advocated for a one revenue agency, an agency where only LRS will collect all charges by Lagos MDAs. But there is a pushback by those MDAs. If Mr. Subar is collecting all the taxes, do you think he's going to collect the kind of levies that Lagos Water Regulatory Commission is collecting for digging boreholes? Because sometimes what they ask people to pay for those things are even more than their corporate taxes. Because once payments are made in exchange for service or for license or for permits, it's outside the remit of the tax authority. And in my view, what can actually address it is for the state government to have a law regulating what they charge. Because once they ask you to pay, you don't have, there is even no right of appeal. If it is tax matter, you can go to tax appeal tribunal or to court. So if you want to carry your load and they said you have to pay for loading, which court are you going to go? So these are the real problems in my view. Thank you.
Thank you very much, Professor Sani. Now we're going to go into Q&A. We'll take 3 questions. 3 questions, and then we close. 3 must be 3. Thank you. So 3 questions. And yeah, all the mics are here. I'll use my mic. That's fine. Let me use my mic.
Thank you. Thank you. Good afternoon, ladies and gentlemen. I will have directed this question to our former speakers, but unfortunately they are not on seat here. But I would like Dr. Zubair or ES Lagos Internal Revenue to probably proffer a solution to this. It's a simple question, and it's just, I want to know what significant impact will the new tax reform have on the stock market? Unfortunately, there are no stockbroker here, so I don't know, maybe you could proffer a solution on their behalf. Thank you.
Who was the question directed at specifically? Okay, does anyone want to attempt the question specifically? Okay. Okay.
Okay, thank you for that question. So you basically just want to generally know what the impact of the tax reform acts are on stock market operations. So from my perspective, I would say that stock market activities are just also commercial activities. So all the general rules, keeping proper books, filing proper returns, and all that, that one will apply. But I suspect that you want me to talk about capital gains tax, that is the one that has a major impact. And I think it was Professor Waleke who dealt with it, and also Folonshaw, who also spoke a little bit about it. So there's been a bit of pushback around the value of the capital gains tax. But as we all know, in the wisdom of the Presidential Committee, the whole idea was just to reduce the amount of arbitrage being applied right now. How do I report these transactions? do I report using the 10% effective rate, which has been there for a while, or do I take some of my transactions into account under the company's income tax? So at the moment, if, for instance, you are a stock market a capital market practitioner and your business is dealing in shares, it's the normal course of your business. So there is then a contradiction how you are going to report those transactions and what are the tax rates that you are going to use. And you will apply some arbitrage between the 10% and the 30%. So the whole idea of this reform is for there to be some definite and specific rate that can be used. So if you are an individual, your effective tax rate is going to apply to the chargeable part of the transactions that we're talking about, whether it's, and usually it's around disposal of the shares, whether it's equities, whatever type of share, whether it's that of a private company or a public company. So I think I'll just stop there, that it's mainly aimed at reducing the maneuvering and the tax planning that is presently in place. Thank you.
Okay, thank you very much. So we'll just take one more question, please. We're out of time. So let's favor, because we've asked the question before. Please, yes, please.
I'm here.
Yeah. Okay, go
good,
ahead.
Good afternoon, everyone. My name is Patrick, and my question is in regards to VAT input recoverability. I know a lot of the speakers, I took note of two of the speakers who specifically mentioned about full VAT input recoverability. But then my question is on section 156 of the NCA, subsection 5, and I'll pick just a part of it so as not to bore us with the whole subsection, but only to the extent that the input tax was incurred for the purpose of consumption, use, or supply in the course of making taxable supplies. So I understand that for direct transactions like purchase of inventory items, you can actually directly tie to production or sales. You can actually pick that and it actually appears straightforward. But for transactions like VAT and consultancy services, can I claim input on that, knowing that I cannot actually directly tie it to sales or production? That's my question. So my question is clarity on VAT input. Any of them, anybody can.
Let me go first. VAT works on a credit system. There must be an input, then an output. When you are talking about services, if you may be an accountant or a lawyer, what you are expected to do is to charge the output VAT. You don't have any input VAT because there isn't any raw material or any process that was involved at the back end. You know, you are talking about output VAT that is being charged by a business and that does not have an input VAT, right?
From the consultant. It's important you clear the question. No, I am a business who consumes consultancy service. So I asked a consultant to render professional services to me. They charge VAT on their invoice. Am I to claim that as an input? Yes. The question is because of the section that I read earlier that says this must be tied directly to production or sales.
I think it's very clear. When you are being charged, VAT by either a consultant or whatever, it is in the process of you generating revenue that you incur that expense. So you are at liberty to claim refund. Yeah.
Yeah, maybe one of the speakers earlier on said that there's got to be some relation between the output and the input VAT. But in this general sense that you have put it, it's incumbent upon you to try to charge, to apply for input VAT, because some of these activities that you sort of described will be linked to the production of goods or services, even as a consultant, right? Simple things like you bought paper, you bought cartridges, that's part of your cost of production as a consultant. So it can be tied directly to the final output that you are billing for and that you have output VAT for. Definitely, because that forms part of your production costs. Yes. Goods or services.
Goods or services. Okay, one last question. Okay, please go ahead.
I like the way some of us are speaking ex cathedra, as if we are Supreme Court. Only time will tell. These are some of the provisions that may trigger court cases. And there's a school of thought in America, the realist school of thought. It says, whatever people may say, it is what the court says that is the law. If you read that provision very well, it's 156 sub 5. It even says capital expenditure can be claimed, which represents a 360-degree reversal from the old law. So the understanding now is you can claim everything that you incur in the course of your business. But by the time the volume of refund application hits the tax authority, nobody can tell what their attitude will be. Yes, we are not God. And again, all these provisions in the tax law may be well-intentioned. It's a question of whether the refund fund, the fund where they are going to pay this money, is available. When we see the volume, I see the likelihood of pushback by the states. Because the states are going to say that this is a deduction like a forced charge from revenue that should ordinarily go to Federation account, which a federal agency will now administer. So even when they are doing the right thing, there will be suspicion. There will be suspicion whether, there are no discrepancy and all that. Let's wait until we get there. But my expectation is that in recognition of the value of the input VAT provision, in incentivizing people to register for VAT, administrators will see that it is better to have more people on board than to shut them out. And ultimately, at the end of the day, the rate of VAT may also go up. Because what the committee even preferred was a 15% rate. And that proposal was shut down. Because once the input VAT claim is huge, it's going to affect the revenue of the states. So ultimately, since we are not God, we have to wait and see.
Thank you very much. One last question.
Okay,
please ask your question.
Thank you. I'm Abdulrahman from Lekki Free Zone Development Company. So I wanted to ask, out of the discussions here, none has touched on how this tax act will impact the free zone, particularly because some of the incentives that we've enjoyed, enterprises in the free zone have enjoyed, has been taken away, it's going to be taken away by this tax act. So we need to know how it's going to impact the free zone. Particularly, we know that once we now, under the new tax act, once food enterprises exceed 25% the export to the custom territory, they have to pay tax on their profit. But the question now is this thing: how are they going to tax what's the way they are going to use to tax the profit? One. Secondly, the fact that these companies are exporting to the Nigerian custom territory, do they also have to pay the development levy? That's the second thing. Then thirdly, also the e-invoicing, especially for free zone to free zone transactions. Is it also going to apply? So I need answers to that. Thank you.
Well, I think the subject matter that you're talking about has to do with Section 60 of the NTA and the 10th schedule of the NTA that talks about free trade zone and export processing zone. That from the setup of export processing zone, you are to export outside the custom territory. If you make a mistake of selling to the custom territory to the tune of 25%, they are going to prorate, because the word prorata is there, the extent to which you sell to the custom area. And it's very easy. With the data available to the Revenue Authority, they know how much you are able to sell. Let me put it in quote, assume data, because the technology I don't think is there to really track how much you are going to sell. Yeah. When the invoicing is finally in place, we'll be able to know that. So the 25% is going to be taxed according to the amount or the volume of sales you are able to make in the custom area. That is what the law says. If you go through 10th schedule of the legislation, that is, written there explicitly. I think that is the first question, right? Then the second question, I didn't get the second question. Okay, the development levy. Of course, the word pro rata is there. Development levy is on accessible income, not on total profit. It's on accessible income or accessible profit of companies. So if we are going to prorate a portion of that development, the 20% you sell to the custom area, of course, can be, a portion, and your development levy can be extracted. As I said, I want to borrow the words of Prof. That is subject to a lot of things that is going to happen in the future, and is going to be determined by courts, because these are things that are going to be tested. The provisions are new. By the time we begin to implement them, we'll find out whether the Revenue Authority, in this case NIRS, because the subnationals have nothing to do with that. This has to do with the NIRS, because chunk of what you are going to be doing has to do with the operations of NIRS. So we are going to see in the future whether the courts will allow FIRS, because it's going to be subjected to litigation, quite sure. It's going to be decided in the favor of NIRS or not, but it's going to be prorated as specified in the in the law.
I think it's also very important for you to understand the principles behind a lot of these provisions. You cannot be in a tax-free zone, get all the benefits that are accruing to that zone, and then you start to sell to the customs territory. So it breeds a lot of unfair competition, because all the companies that are not based in the free trade zone will be at a great disadvantage. They are paying taxes at 30%, and then you are getting all the benefits and all the exemptions, and then you now sell into the customs territory without paying any tax. So this is what it is trying to address, because it's happening at the moment, where companies in the free trade zone are also selling into the customs territory, or for better understanding, a lot of what they're doing really is supposed to be for export, but then they are selling into the local market and not paying taxes. So just if we look at it from that perspective, that's what is being addressed right now.
Sorry, in addition to what Mr. Zubairu said, I think by 2028, if you continue to sell to the custom area consistently, the Revenue Authority will assume you are selling 100% in the custom area, and you are going to be taxed accordingly. So caution needs to be put that you are not selling to the custom, custom territory, as he has said. The whole setup is to ensure that you are able to export so that the local companies will be able to also play on a level playing ground. Thank you.
Okay, Professor Sani.
You cannot have a reform and then allow all the leakages to continue. There are abuses in that sector. If you go strictly by the books, there are so many companies that are enjoyed pioneer status that have no business with it at all. So now that there is a rollback, there will be pushback. Okay? Let me end on the basis of what Abbas said during his presentation. So when some difficult questions were being thrown at him, he said, I will answer you today because Access Bank had paid for it. As part of your tax management strategies, there are questions that are best answered when you look at all the sources, all the provisions, and you do the analysis, and you look at what obtains in practice and what is likely to play out in future. Small businesses, fine, but you must recognize the value of tax planning and also get tax advisory on some of these things. This is not substitute for tax advisory. So I want you to recognize that beyond this, you also have a responsibility to search and seek help. And that is my honest advice. Thank you.
Professor Sani, Mr. Ayodele Subari, Dr. Zaid Abubakar, thank you very, very much for this very insightful panel. Thank you very much. As we rise, we'll take some pictures. I would also like to invite the group CFO, Ibukun Oyedeji, to come and present the gifts as well. Please, I want to invite Ibukun Oyedeji, the group CFO, to come and present the gifts.
Okay, thank you very much. Good afternoon, everyone. Thank you so much for the panelists. I think I was actually expecting a lot more questions because it's very rare. Sorry, can we just have a bit of peace and quiet? Thank you. It's really rare to have chairman of the state inland revenue in a room, and for me, it's a real privilege to have you guys honor this panel session. And that's what I was going to actually say, and also acknowledge the various states that we have to interact with as a bank. We're really grateful for the support you've given us, the various chairmen of the state inland revenue. And on behalf of the bank, I just really want to thank each and every one of you for showing up. Because of the time, if not, would have had everyone. Like I said to my colleagues, I wish every single state chairman could have the mic and just say a few things about what they're doing in their state to support us as in terms of tax. But because this is not, it's because of the time, I'll just say thank you on behalf of the bank to each and everyone for honoring us today. But to the panelists, I'll just have to say thank you again and present the gift. We're really, really, really grateful for honoring this our invitation. And more years or more sessions, we'll be inviting each one to come and talk there. Thank you.
Thank you.
So on behalf of the bank, I would like to say a very big thank you to you, sir, for honoring the session. Thank you so much. Thank you so much. Thank you.
So please, we'll have some photographs. Please, Professor Don. Yes, please. May I also invite, as they're taking, I want to invite Mr. Olusegun Adeshokan. Mr. Ayodele Subar is already here. Professor Abiola Sani is here. Dr. Zaid Abubakar is here. I want to invite Mr. Victor Kafor, Mr. Lukman Martins, members of Access Bank Executive Management, okay, so all the chairmen of the State Internal Revenue Service, please come forward. So all the Can we have members of the Access Bank Executive Management and the Federal Inland Revenue Service officials? Okay. So before that last picture, let's just have the closing remarks from Elizabeth Ogwegu, the Group Head of Financial Markets.
Good afternoon, everyone. Okay, so
Sorry, everyone. Sorry.
can we just take the closing remarks?
Can we just take the closing remarks, please? Please, can we take the closing remarks, please?
Okay, so on behalf of Access Bank, I would like to express our sincere appreciation to everyone who contributed to the success of the tax reform. Your presence and active engagements have made today's discussion truly enriching and impactful. We're grateful to our distinguished speakers, panelists, and subject matter experts for the depth of insights they shared in this forum, its policies, its implications, and the opportunities it presents for innovation, improved compliance, and sustainable growth. Across all the institutions, SMEs, and of course the corporate organizations, your contributions have provided us much needed clarity and practical guidance as we prepare for the emerging 2026 tax regime. To all our partners, our stakeholders, our customers, and participants, thank you for your thoughtful questions, perspectives, and comments to commitment to advancing progressive tax policy and strengthening Nigeria's economic landscape. It is through collaborative dialogue such as this that we continue to build a more resilient, transparent, and prosperous economy. On behalf of management and staff of Access Bank, we appreciate the organizing team, everyone who participated, and everyone behind the scenes whose dedication ensured the seamless delivery of this important engagement. Thank you all once again for coming, and see you again next year. Thank you.
Thank you very much. Sorry, there's one more thing. We started with a prayer. We will need to end with a prayer. Please, we want to pray. We want to pray. Please, we want to pray. We want to pray. Please, just 10 seconds. Can we please invite Alhaji Bello Ibrahim, the chairman at Borno State Internal Revenue Service, to come and give us the closing prayer, please.
Oh God Almighty, we are all faithfuls. We have gathered here this morning till this moment to deliberate and to share our rough minds on an issue we believe will shape our country and our lives, for our children and for everybody. God Almighty, stand with us, guide us, bless this sitting and make it important. Allahumma salli ala Sayyidina Muhammadin wa ala ali Muhammad kama sallaita ala Ibrahim wa ala ali Ibrahim innaka Hamidun Majid. Allahumma barik ala Muhammad wa ala ali Muhammad kama barakta ala Ibrahim wa ala ali Ibrahim innaka Hamidun Majid. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين.
Thank you very much, everybody.